Skinny tie? Yeah. I always say, this is my line, whenever anyone in America has a go at me about a skinny tie. The older you get, the wider it gets.
Oh, really?
Until it becomes a bow tie.
This is a bow tie.
Until it becomes so fat, you just sort of...
How did you make the decision to move to the Bahamas of all the options out there?
We've been looking at the Bahamas for a while. They're one of the first countries to roll out any comprehensive regulation for cryptocurrencies, which we think is extremely important for the space and a really positive sign.
Welcome back to the European Market Open. A minute to go until the start of cash equities trading. I'm Anna Edwards, live in London with Tom McKenzie.
And here are your top stories. The cash trade is just less than an hour away. Here are your headlines, of course. The global energy crisis sends oil surging. WTI closes above $80 per barrel for the first time since 2014. The power price crunch raises fears of elevated inflation. Asia stocks and global futures fall as traders await US CPI. That is tomorrow. And UK payrolls rise above pre-COVID levels, an indication of the strength in the labour market that may push the Bank of England to hike rates.
Another day of focus on energy markets then, Tom. Watching oil prices head higher a little bit earlier. It's not just oil prices, though. We're focused on coal prices, on aluminium, focused on all kinds of components of that energy mix. Gas prices, of course, have been front and centre for everybody here in Europe over recent weeks. So as that continues to be a theme, inflation fears continue to be to the forefront. European equity market futures look significantly weaker this morning. How do we open up on these European markets?
Currently opening down on the FTSE 100 by about 0.4%, despite that more positive jobs data that we got. The unemployment rate edging down from 5.4% to 5.2%. But we know that the Bank of England's Andrew Bailey has said that the wages and the employment components in terms of the data are central to his and his team's decision-making at the MPC as to the rate hike cycle. We know, of course, that the money markets are pricing in a rate hike as soon as the end of this year by the Bank of England. So the FTSE currently down more than 1%, down 82 points. In terms of Spain, you're seeing selling there, pretty heavy as well, down almost 1.5%. The CAC 40, Macron is in focus today with his investment plan. We'll get more details in the next few hours. The CAC 40 currently down also more than 1%. We can switch it on and look at the sectors. It was basic resources that were stronger yesterday and held the stock 600 just into positive territory towards the close yesterday in Europe because of those stronger energy or materials prices. Energy currently down more than 1.2%. The utilities as well under pressure, down 0.6%. Banks down 1.5%. You have this debate as well. The investor Michael Rourke saying it's banks that you want to be owning, not the technology shares, but currently down 1.5%. Tech also lower by 1.2%. Morgan Stanley warning of the divergence between the optimism in the markets and consumer sentiment that is edging off. This is in the US. Goldman Sachs and JP Morgan saying buy the dip. Here's how things stand just in the first a few seconds of the trading session here in Europe. Anna.
Yeah, so in these European equity markets, not one sector in positive territory then, Tom, as we move to the downside. European equity markets opening firmly in the red, down by just shy of 1% on the stock 600. Global markets struggle to shake off worries that inflation will sap company profits and economic expansion. And if this earnings season is clouded by downward guidance revisions, it could catch up with stock market investors. That's according to Morgan Stanley Wealth Management. That's perhaps a souring consumer sentiment could translate into less spending and more saving. Joining us now is Stéphane Monnier, Banque Lombard Odier Chief Investment Officer, who's with us this morning to take us through these markets. Stéphane, really nice to speak to you. So we see European equity markets to the downside, ongoing concerns around inflation and the like. But you still like European equities. You like equities generally, but European equities in particular. Tell us your investment case at this point.
Good morning, Anna, and thank you for having me on the show. Yes, indeed, we are still recommending to stay exposed to risky assets with a preference for European equities, as you are mentioning, and also, more the cyclical type of stocks and also the value stocks, so banks and energy. That's our view, because we think that, the inflation that we are experiencing right now in the economy is a transitory phenomenon, and we think that corporate earnings will be good going forward, thanks to the strong economic recovery that we are experiencing, and Europe is well positioned to benefit from that.
You talk about those positive corporate earnings. Is that a look on Q3? Do you need to look past Q3 and look at Q4? Because that arguably is where a lot of this pressure on margins is going to come through.
That's absolutely our view, Tom. It's clear that, during Q3, there will be probably not so good corporate earnings when compared to Q2, because Q3 has been disrupted by the Delta variant and some disruption in the supply chain. So we are not expecting a huge increase in earnings in Q3, but we are quite optimistic for Q4 and Q1 2022, as you were mentioning.
Let me ask you about energy markets then, because we have this ongoing focus, of course, on inflation, and part of that is really being driven by, or very much this is being driven by energy. I see that oil prices just moving to the downside a little bit here, so 83.41 on Brent, but we went above $84 a barrel. Where's your focus when it comes to oil markets then, Stéphane? Is it around higher and higher oil prices, or do you think at some point demand destruction starts to come in here, and that naturally puts a lid on these oil prices or wider energy markets?
Well, as far as oil is concerned, we are quite relaxed going forward for the price of oil, because we know that there is a lot of spare capacity within OPEC and outside OPEC. And this is not our belief that, oil producer wants necessarily to have a price of oil towards $100 or above. So our expectation is probably between now and the year end, the price of oil will stay around 80, but going into 2022, maybe by mid-22, it will be around $70 a barrel, and then maybe $60 a barrel at the end of 2022. And as you were saying, Anna, there is an element of demand that will also reduce, and also the inventory will be rebuilt in the meantime. So that's why we are not too worried about the price of oil going forward, and that underpins also our inflation scenario.
Okay, so that forecast of $60 to $70 a barrel by the end of 2022. Stéphane Monnier, Banque Lombard Odier, Chief Investment Officer, will stay with us. And coming up, we hear from the IIF annual meeting as central bankers face up to rising price pressures. Don't miss that next. This is Bloomberg.
China's growth, because it is already slowing. Chinese manufacturers are curbing production. This is the latest shock to global supply chains, already delayed by, part delays, chip shortages, saddled with soaring commodity prices as well.
Well, Haslinda, when we've seen a lot of supply chain disruptions at the beginning of this COVID pandemic, and then, supply chains became resilient and it really moved goods around, especially medical goods and supplies. But now, at this part of the pandemic, we are seeing disruptions again. and discontinuities. And that is because of what we spoke about, the demand that is pent up. And of course, if you have factories slowing down and, not being able to produce as much, that is going to impact growth and the recovery.
Google is saying it has accelerated innovation in the country, and it's planning to appeal the FTC's decision. What's your take on this, and how do you plan for further scrutinies?
We are going to see what they make and what changes they are actually bring to this market.
How far will the Bloomberg surveillance team go to get the inside story?
The UK will deploy its reserve tanker fleet this afternoon.
There we go.
Tom McKean and I might be part of the reserve fleet
We might be.
that gets deployed.
This is more complex than people think. The steering wheel's on the wrong side of the truck. That's the first thing.
Oh, my God.
Thank you to the gentleman out on Twitter that captured this moment.
Wait, question.
Wonderful.
Who of you has a driver's license?
You don't need that.
Welcome back to the Open. Just 8 minutes into the European trading day, red across the screen as these inflation fears and concerns about energy prices are dialed back up in terms of the centrality of where they sit for investors right now. Okay, let's take a look at what is on the move this morning. Anna.
Yeah, we've got Anglo-American to the downside. Just an example of one of the stocks in the basic resources sector moving lower. In fact, the worst performing in that sector. But the sector as a whole is the worst performing across Europe. And that just that tells you something about how far we've already come, I suppose, on these higher energy prices. A lot of people factoring in those higher energy prices, higher raw material prices. That was seen as pretty good for the mining sector. But today it looks a little bit different. We've got slightly weaker oil prices and some equity market investors then clearly deciding that now is time to take some profits on that mining sector. Anglo-American down by 2.3%.
Another major theme illustrated by what's going on at Airbus, supply chain constraints, of course. So the company delivering just one aircraft in September. Currently, the stock down 1.3%. Citi, by the way, saying that they think that they will still be able to hit their full year targets. So that is Airbus.
Yeah, there's a lot of focus, of course, on disruptions in supply chain, but people who might make money at a time when things need to get places quickly and people don't mind paying up, logistics companies. DSV is a Danish logistics business. They upgraded their full-year outlook for 2021. According to analysts, delivering good news on forwarding fundamentals. So some of the fundamentals underpinning that particular sector looking not too bad, and the stock is up by 1.3% in what is a very weak market then, Tom.
Okay, from the corporate level to the macro then, central bankers facing up to rising price pressures as the IIF started its annual membership meeting on Monday. Speakers including ECB Chief Economist Philip Lane and JP Morgan Chase CEO Jamie Dimon commented on current inflation fears and central bank policy.
Do we really think what we're seeing now is going to move the dial on the medium-term inflation outlook? And in fact, I don't think that's obvious.
I think there's a transitory component. I think there's a permanent component. And you see it with wages and commodities and all the things like that. So, yeah, you're probably at an inflection point.
I'm on the camp of those who believe that those are in the main transitory. I think that central banks will be able to get through them without having to depart, very significantly from the plans that they have.
As the central banks taper, rates will go up. It's not terrible as long as inflation, isn't out of control.
There's a lot of debt out there, and movements in interest rates will have a big impact.
Central banks have some tricky calls to make, and we all depend on them getting them right.
Okay, still with us is Stéphane Monnier, Banque Lombard Odier, Chief Investment Officer. Stéphane, what gives you conviction that inflation will indeed remain transitory, and what is the window that you're looking at?
So the reason why we think the inflation will be transitory is a normal consequence of the COVID-19 crisis. Clearly, there has been a standstill in the economy, and now it's picking up quickly, and there are all those supply chain disruptions that are happening. And the way going forward, we think that the demand is going to move away from goods towards services as the economy recover, and hence the inflation will be less. Also, in the inflation numbers that you see today, there is a strong element of a base effect. The price of oil was at $30 a year ago. It's now at $80. So the contribution to the inflation is quite important. Going forward, you will have to forecast a price of oil at maybe $180 to have the same base effect for next year. So by definition, there will be, I would say, a reduction of inflation rates going forward. And the time frame that we expect is, to see the first positive result maybe tomorrow with the inflation number tomorrow in the US, where we expect 0.2%. But clearly, in the first quarter of 2020, we think the situation should improve quite a lot on the inflation front.
So the first quarter of next year, then, things should improve on the inflation front, you think? So you seem to be leaning towards some of those reopening trades then, Stefan. If you think money goes from goods to services, you look for those reopening trades. Many people thought that last summer, and of course we've come a long way since then. Are we still focused then on these reopening trades, on people feeling more and more comfortable to go out and spend money on services, essentially?
Yeah, that's absolutely correct. And the difference that we had during the summer that many people had not expected was the Delta variant. And now, with the vaccination campaign being much more ahead, we are less worried. Of course, if there was a new variant coming from the epidemic, it could change our scenario. But currently, that's why we are more in favor of those reopening trades.
Stefan, I know you have a positive view, ultimately, longer term at least, on China, it seems. So you're illustrating a view, you see a rebound in the fourth quarter for the Chinese economy that remains under pressure for a number of reasons that we continue to talk about almost on a daily basis. What underpins your view that China's economy will rebound in the fourth quarter?
Well, first, there's been a lot of specific events in the third quarter. You have had floods in China, you have had the Delta variant as well, and you have had some regulatory measures that have been, somehow slowing a little bit things in China. We think, most of those issues are behind us now in China, and the Chinese authority have a lot of leeway on the monetary and the fiscal front, I would say, to help the economy. We are, for instance, expecting a RRR rate cut coming, in the coming weeks. So all those elements are positive. In terms of growth for China, we are expecting something around 8.7% for this year, 2021, and a deceleration in 2022, but still at a reasonably elevated level of 5.3%, which is coming close to the long-term trade potential for the Chinese economy.
Let me ask you about the luxury sector in Europe, Stefan, and this is linked, of course, to the Chinese conversation, because for some time we've seen luxury names in Europe under pressure as a result of that common prosperity drive in China. Just now I see, though, that some of our colleagues pointing towards the earnings premium in luxury having fallen away because of those concerns, and maybe they look cheaper than they were. What do you think about European luxury at this point?
Well, European luxury is not our favorite sector at this stage. We have a strong preference for cyclical stocks or, stocks that are going to benefit from the reopenings, as we were mentioning. And those luxury goods, as you rightly point out, are under scrutiny, in China because, the current policy is more for an harmonious, growth and wealth prosperity for the overall population, and not to favor certain fringes of the population that could buy those, I would say, luxury products. So we are not very positive on luxury goods going forward.
Okay, Stefan, what about your views on the UK? Equities here performing pretty well over the last month. The value, the cyclical, of course, a bias in the FTSE 100. Do you expect that to be sustained?
Yeah, you're absolutely right, Tom. And the main reason why the UK equities have performed well is the sector composition. They have a lot of exposure to banks and energy, which are the sectors that have been doing well. And we think, obviously the composition of the UK index is not going to change, and therefore we continue to be positive on UK equities. There might be the question at some stage, should we switch back towards continental Europe? It will depend on, I would say, the situation in the UK. The UK has been managing quite well its vaccination campaign and is coming out of the COVID crisis quite well. However, there is the Brexit situation on top of that, which creates, I would say, some supply chain issues and some labor issues. I'm not really convinced that the right policy would be to be a lot of tightening on the fiscal front and the monetary front. So these are point of attention as far as I'm concerned, because I don't think you solve these, I would say, issues on the supply side by hiking rates or by being more orthodox in your fiscal policy. So we need to monitor what's going to happen. Currently, there are 3 hikes that are expected in the UK market, and we think it's a little bit overdone. So we are monitoring the situation on that.
Stéphane, thanks very much. Stéphane Mounier, Banque Lombard Odier, Chief Investments Officer, thanks very much for joining us. Let's get a Bloomberg Business Flash. All the top corporate stories we're covering this morning. Here's Laura Wright. Good morning, Laura.
Good morning, Anna. Southwest Airlines has apologized for cancelling more than 3,000 flights over just 4 days. The Dallas-based carrier says a shortage of workers overlapped with storms and an air traffic control interruption. Southwest says it's hired about half of the 5,000 workers it wants to add before the end of the year. Jamie Dimon is forecasting tighter regulation for cryptocurrencies. The JP Morgan CEO told the Institute of International Finance that anxiety around stablecoins and the asset class more generally is growing in Washington.
I personally think that Bitcoin is worthless, but I don't want to be a spokesman for it. I don't care. It makes no difference to me. Our clients are adults. They disagree. That's what makes markets. So if they want to have access to buy or sell Bitcoin, it's hard. We can't custody it, but we can give them legitimate, as clean as possible access.
A new Californian law will require big retailers to create gender-neutral departments for some toys and childcare items. By the start of 2024, larger retailers will have to maintain gender-neutral sections for a reasonable amount of children's items, though clothing isn't included. The legislation is the first of its kind in the US. That's the Bloomberg Business Flash. Tom, Anna.
Laura, thank you very much indeed. OK, coming up, UK payrolls rise above pre-COVID levels. It's an indication, of course, of the strength of the labour market here that may push the Bank of England to hike rates. We'll get more details on that. This is Bloomberg.
Natanggap ko po ang inyong nominasyon sa akin bilang kandidato sa pagkapangulo ng Republika ng Pilipinas. I am a fighter, and I will always be a fighter inside and outside the ring.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
Well, in the next few months, I would say that certainly is a significant risk. Of course, depends also on how cold the weather is going to be in Europe, in the Northern Hemisphere, and other variables. But that's a material risk at this point, yes. Well, I think they may start tapering in November, but I think that the test for the Fed is going to be that if they start tapering and you have a shock like in the fourth quarter of 18, when you have bond yields going higher, credit spreads going higher, the stock market correcting sharply, and the economy is slowing down very sharply, I don't think they'll be able to be tough on inflation. They're going to wimp out, and they're going to dodge it, and they're going to postpone any finishing of tapering or raising rates.
That was Nouriel Roubini speaking earlier on the oil price and the Fed's tapering plan. Welcome back to the European Market Open. And with that European Market Open in mind, let's check where we are across the European space right now. The CAC 40 down by just over 1%. Airbus, of course, very much in focus over in Paris, weighing on that market. Here in London, we have some weaknesses, of course, as well. And it's basically resources to the downside, or losing the most, I should say, because, Tom, all sectors actually in negative territory here in Europe today.
Indeed. And in terms of what's happening in the UK, you had better job numbers, by the way. British companies, by the way, pushing at the number of workers on payrolls above pre-pandemic levels last month. It's an indication of the strength in the labour market here. Joining us for the details is UK reporter Lizzie Burden. Lizzie, what do the employment numbers tell us about the broader picture for jobs here in the UK?
Yeah, strong labour market numbers here in the UK today, Tom. We had payrolls climbing by a record 207,000, underlying wage growth rising between 4.1% and 5.6% in August. So that inflationary pressure will embolden the Bank of England to raise rates in December as markets are pricing. The Bank of England already expected inflation to tip past 4% in the fourth quarter, twice the bank's target. And the risk of raising rates in December was that it would choke off the recovery. But if there was a rise in unemployment post-furlough. But the numbers today just don't suggest that. Unemployment ticked down from 4.6% to 4.5%. Now, you could ask what will happen to the million or so workers who were the last left on furlough when the scheme ended last month. But strong hiring numbers as well suggest that many of them will be absorbed into jobs. Now, we won't get the October unemployment print until December the 14th, so right before the Bank of England's December decision. But all this data will build the case for a December rate hike, and that final print will likely just rubber stamp the argument.
Yeah, really interesting to see how that labour market story develops then, Lizzie, as we see the end, or we've seen the end of the furlough scheme, but as that starts to really filter through into the data. UK reporter Lizzie Burden, and of course the Bank of England, Tom, doesn't expect that we will see that pickup in the unemployment rate, and that's why we're seeing all this talk of higher interest rates. Let's quickly nod towards the stories that have been coming out of China this morning, because they maybe took the edge off risk sentiment through the Asian session and maybe continue to do that into Europe. The Chinese starting an inspection of financial regulators and state banks. This is the first time in some 6 years, I think, to try and root out corruption. But we've had a number of news lines coming out of China this morning.
Yeah, that one is important. It was flagged by state media a few weeks ago, but the arm of the government that is pursuing this is very, very powerful indeed. So it's going to be looking, as you say, at state-owned banks and financial businesses within China. The other lines we're hearing from President Xi Jinping, who's been speaking in the last hour or so, fleshing out a little bit their plans around carbon neutral by 2030. That's the overall aim. And what he said was they're also going to illustrate and publish plans for various different industries and sectors as to essentially how they're going to meet those 2030 goals. That has been something people have been waiting for. We don't have the details yet. He says they're going to come. The other announcement from President Xi Jinping was that they're going to have a 100 gigawatt renewable energy build out in the desert there. So fairly major in terms of wind and solar.
Yeah, and as we head towards COP26, of course, looking for more detail from countries all over the world on their national plans on what they're going to commit to. So that's something we are keenly waiting for and watching for. Then coming up on this programme, European leaders gather in Kiev today for the EU-Ukraine summit with the focus on the energy crisis and the controversial Nord Stream 2 project. We'll delve into the details, the latest on Ukraine's role in that transit of gas, of Russian gas from Russia to Europe. That's clearly part of the conversation here, but with Nord Stream 2 waiting in the wings, waiting to be opened up, what role for Ukraine there? We'll also focus in on the broader story around energy markets right now. This is Bloomberg.
as Magnus TV in Facebook since I'm streaming Axie Infinity. Axie Infinity is an NFT game where you can earn tokens, and then that tokens can be converted into pesos. I'm playing almost 4 to 5 hours a day. I'm earning, I can say it's really a lot of money. It can help to sustain my family needs and also to sustain my own business that I'm starting. I'm a little bit worried about it because some people who join this Axie Infinity thinking that this is an easy money game. They can earn a lot on this game. This game can sustain their life. And I think that is not the point, or that is not really the game. We are trying now to build a community where other players or my scholars can join this esport, playing Axie Infinity for now, even 5 years, I think.
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the European Market Open. We're 30 minutes into our European trading day. Here are your top headlines. The global energy crisis sends oil surging. WTI closes above $80 per barrel for the first time since 2014. Pulls back slightly here in Europe. The power price crunch raises fears of elevated inflation. European stocks and US futures slump as traders await US CPI tomorrow. And UK payrolls rise above pre-COVID levels, an indication in the strength of the labour market that may push the Bank of England to hike rates. Tom, so we're half an hour into a European trading session that's pretty negative, even if our focus is on higher energy prices globally and on the inflation narrative. Actually, when you look at what's happening in the sectors, basic resources to the bottom, the worst performing in Europe today, or near the bottom, it seems that we're moving on a slightly different trajectory on that inflation narrative here in Europe.
Yeah, having been the best performing sector yesterday, it just held the stock 600 up in green territory. Basic resources yesterday on the back of those higher input prices, those higher materials and commodity prices. Today, though, it's a slightly different story, as Anna was saying, possibly some profit tapering when it comes to basic resources. Stocks Europe 600 currently down 0.8%. Over in Germany, seeing losses in similar territory of about 116 points, 0.7%. The CAC 40 is also lower, close to 1%. We're going to get details from President Macron about his investment plans longer term as the politics in France becomes more central to what's going on there. The FTSE 100 down 0.8%, despite what Bloomberg Intelligence says were some very positive numbers in terms of the jobs claims, additional jobs, and the unemployment number moving lower here in the UK. But that case for the BOE's rate hike by the end of the year seems to be being supported by that data. Let's switch it on and have a look at what is happening and unfolding across the sectors here then. Top of the list, utilities down by just 0.4%. Every sector in the red, though, this Tuesday. At the bottom of the list, you've got basic resources, as we're discussing, down by 1.4%, followed by technology and banks as well. But we had Michael O'Rourke, the investor, saying that banks is what you want to own, forget about technology. Morgan Stanley warning about that divergence between the markets and consumer sentiment in the US. JP Morgan, Goldman Sachs saying buy the dip, particularly when you see a correction of 5% or more. Okay, we'll have a take and look at what else is coming up as well in terms of European politics, Anna.
Yeah, absolutely. Let's move on to the European politics story and where that rubs up against the energy crisis. There's a summit taking place today in Kiev. It's taking place in Ukraine as Ukraine strives to remain a key transit nation for Russian gas as Europe suffers a serious energy crunch. It's thrown a spotlight on Russia's status as an oil and gas exporter. For more on the politics, let's speak to our correspondent Maria Tadeo, who joins us now from Berlin. And Maria, what is the significance of this meeting then between the EU and Ukraine as energy prices jump?
Yes, Anna, and in fact, we're actually waiting to hear from Ursula von der Leyen, the head of the European Council, and President Zelensky on this press conference that we're expecting pretty much imminently. And, you know, Anna, this trip, of course, it has two big themes going into it. One is the political nature that it carries. The European Union wants to send a very clear message that Ukraine is not isolated in the face of potential Russian aggression. The Ukrainians have also been very clear that they feel for the integrity of their country. You know, this is a proxy war that's been lasting now for 5 years. But of course, you have the big energy contracts that are coming into play here, and that feeds very much into the geopolitics. For Ukraine, it's not so much about securing their gas production going into the winter. This is more about securing the money that comes from the booking of transit fees. Remember, from that Nord Stream pipeline, Ukraine could be the biggest loser. They stand to lose potentially around 1 billion euros if those contracts are not honored. So today, for Ukraine, but also potentially even the European Union, this is about sending a very clear message that the money will come through, that Ukraine will continue to have a source of income there, and therefore not be destabilized from an economic perspective if Russia decides again to not keep up that supply that we've seen. Again, the European Union arguing that Russia could be doing more than it is at the moment.
Maria, do we have any clarity on that question? Will Russia increase supply, or is it going to keep the pressure on Europe?
Well, you know, Tom, the easy narrative on this would be to say ultimately this is a political game from the Russians. They want to turn the heat going into the winter to European governments. They want to have Europe paying very expensive for that gas. But there's two things that you should factor. One is that Vladimir Putin has already hinted very much that he's willing to step into this market and intervene in the market if that means perhaps that the Nord Stream could be accelerated. And the second thing is that, to some extent, the Russians do not have an interest in pushing Europe too hard at this stage. We know that there are sanctions happening from the EU into Russia. Those are hurting Russian business. And I had one diplomat telling me at this point, Russia and the economic circle of Vladimir Putin, they're very much with their hands tied. So if anything, the Russians do have an interest to cooperate with the European Union and hope that perhaps those sanctions could be lifted.
Okay, Maria Tadeo in Berlin with the latest on that story. We'll keep across, though, all things energy and get out to our reporter Alex Nicholson in Moscow. Alex, how has the energy crisis then impacted Russia's markets?
Hi, good morning, Tom. Well, as you'd expect, it's given a real lift to the Russian equity and currency markets here. If we take a look at the stock indexes, the ruble-denominated MOEX, which I think you have the chart for there, is at a record. The RTS in dollars is the highest since 2011, and the ruble, meanwhile, is at the strongest since July last year. So in terms of the recommendations out there, JP Morgan analysts sort of summed it up nicely the other day. In their opinion, if you're bullish commodities, the ideal expression of that is via Russian equities. And the logic, of course, being that the declining oil prices drive higher earnings and dividends for energy stocks, and those account for a whopping 60% of the Russian Depository Index, which JP Morgan is focusing on. And that, in turn, helps the ruble, and the strong currency filters through to the other domestic names. Also, adding to the gains is another quite important trend. Russia is also seeing inflows as investors shelter from the Evergrande debt crisis in China. Carahai Capital, Wells Fargo Asset Management, they said that they've been moving investments out of China and into Russia. I should say, of course, here that bonds are an exception. Russia's central bank is pursuing one of the most aggressive tightening paths in emerging markets to try and get inflation back to target, and yields are now around their highest since March 2020. Stocks in the ruble, though, still going strong.
Okay, so that's so we've seen increased interest in Russian assets then as a result of these higher energy prices, Alex. So the difficult question, I suppose, how long does this all last? I guess it depends how long gas prices remain elevated.
Well, yeah, that's right. I mean, in terms of markets, we know that things can turn around very fast here, and there are still plenty of risks out there. For now, though, geopolitical tensions have eased. Investors have sort of shrugged off the crackdown that we saw around the parliamentary elections. And the same goes for sanctions. The last round of US penalties in April proved milder than anticipated. And the sort of fog that was hanging over the bond and currency market for months eventually dispersed, and investors, if you like, could once again see through to Russia's great fundamentals, things like 600 billion of reserves and counting, an enviably low debt burden, and of course a central bank chief who seems a very safe pair of hands, pushing hard to tame inflation. But relations with the West are still very poor. It really wouldn't take much for the sanctions threat to come back, and we've seen that repeatedly since Russia annexed Crimea in 2014. It really remains to be seen if the high energy prices we have now would act as a counterweight should there be a new geopolitical threat. And of course, if you ultimately take a much longer view on oil, then as the world pushes on with its transition to a low-carbon economy, Russia's dependence on hydrocarbons ultimately leaves it extremely vulnerable in the long run.
Okay, yeah, it just depends what money you make out of that transition, I suppose. Alex, thanks very much. Our reporter Alex Nicholson in Moscow. Let's get a Bloomberg Business Flash. Top corporate stories we're covering today. Here's Laura.
Thanks, Anna. EasyJet is to boost capacity to around 70% of 2019 levels this quarter as the easing of travel restrictions in the UK leads to a surge in bookings. The discount carrier says it generated positive cash flow in the peak summer months of July to September. EasyJet flew at 58% of pre-pandemic levels during the summer months. Thermal coal futures have surged to a record for a second day in China as another key mining region suffered flooding. 2 mines in the Shanghai province are reported to have been impacted by heavy rainfall. That comes after floods closed some 10% of coal mines in the country's biggest coal-producing region in recent days. Bloomberg understands Syngenta will get an update on its planned Shanghai IPO this week. Syngenta's share offering in Shanghai, which could be the world's largest this year, hit a roadblock after the exchange suspended its application, pending an update to information about its earnings. Bloomberg is told about 50 other companies are also facing a delay to their Starboard IPO applications. That's the Bloomberg Business Flash. Tom, Anna.
Laura Wright here in London. Thank you very much indeed. Okay, coming up, President Macron will be unveiling his €30 billion investment plan shortly. We're going to discuss that next. This is Bloomberg.
What have we learned from this ever-growing crisis so far?
From my investment perspective, I think diversification is very important. So far this year, we've seen many events, right? Maybe in the fintech sector, and education, casino, and property. So I think diversification help you lower your risk on your overall portfolio.
Medium term, though, are you seeing more risk and reward in the high-yield space in Asia? I mean, how are you viewing this right now? Are there actually buying opportunities given just the selling we've seen?
This time is a bit different in the property cycle because in the last, when you see there's a tightening measure, there's always demand there, right? Just the government trying to suppress the demand. But this time we're seeing a confidence issue, is like a buyer strike because of the sentiment. The evergreen is hurting the sentiment and people don't want to buy. And other developers, because they want to get cash.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
About the fossil fuels that are down in the ground. One of the main ones is actually methane. And what we refer to as natural gas is essentially a combination of gases that come up from the ground that are mostly methane with a few other gases thrown in there. Methane is a super powerful greenhouse gas. It has about 80 times the global warming potential of carbon dioxide over a 20-year period. And scientists think that about a quarter of all the human-caused warming that we've experienced to date is because of methane emissions by humans. We do a lot of different things to put methane in the atmosphere. Raising livestock is a big contributor. Growing rice is another one. Landfills, sewage, there's all different kinds of things. And then, of course, oil and gas.
And that was Bloomberg's Zachary Maida there explaining why methane is so bad for the environment. It's also the topic of today's Big Take, which Zachary wrote with Rachel Adams-Heard. They investigated the hundreds of thousands of decrepit oil and gas wells across the US leaking methane into the sky. Read more at NI Big Take. Go on the terminal. OK, let's get the Bloomberg First Word News now with Laura Wright. Laura.
Thanks, Tom. A parliamentary inquiry has found the UK government made serious mistakes in its early handling of the COVID pandemic. The sharply critical report says many lives would have been saved if a full lockdown had been imposed more quickly. It said the country adopted a fatalistic approach to COVID early last year and failed to learn from East Asian countries that halted the spread using swift lockdowns and mass testing. Germany's Social Democrats met with potential coalition allies for more than 10 hours of discussions yesterday. The Greens urged debt relief for pandemic-hit EU nations, while the business-friendly Free Democrats reaffirmed the party's red lines of no tax increases and sticking to debt limits. 4 more hours of talks are planned for today as Olaf Scholz continues his bid to succeed Angela Merkel. The IMF board has decided to keep Kristalina Georgieva as managing director, reaffirming full confidence in her leadership. The leader had been examining allegations of improper actions during her time at working with the World Bank. Treasury Secretary Janet Yellen says there was no basis for a change in IMF leadership. She also won support from European nations, including France and the UK. Thermal coal futures have surged to a record for a second day in China as another key mining region suffered flooding. 2 mines in the Shanxi province are reported to have been impacted by heavy rainfall. That comes after floods closed some 10% of coal mines in the country's biggest coal-producing region in recent days. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Anna.
Laura, thanks very much. Laura Wright here in London. Just want to bring you a red headline across the Bloomberg. The EU gets a record 120 billion euros of bids for its debut green bond. The EU has not been raising money for all that long on its own name in European debt markets. It has arrived with great force, it would seem. And here we have them coming through with this debut green bond. We will hear a lot more about green bonds, no doubt, as we head towards COP26. Now, in less than 20 minutes over in France, President Macron is set to unveil his highly anticipated 2030 investment plan. He's expected to set out how up to 30 billion euros is to be spent on key strategic sectors over the next decade. No doubt there'll be a green element to this as well. Caroline Conan joins us now from Paris to tell us more about this. Caroline, good morning. What can we expect then in this new French stimulus plan?
Clearly, what Emmanuel Macron is trying to do is to show that he's thinking long-term investment, strategic investment in France in order to make France more independent from technology from China or the US. And he's also thinking about beyond the pandemic emergency response, so beyond the 100 billion euro recovery plan that he had presented last year. This time we expect around 30 billion euros to be spent in batteries, hydrogen, small modular nuclear reactors, which he said could be a response in times of energy crisis. All these key strategic sectors that he says will be important to keep France independent over the next decade. Critics have said, though, that these 30 billion euros were not included in the last French budget, presented just a couple of weeks ago, and that this will add pressure on French public finances at a time when French debt has already been skyrocketing.
Caroline, how important are the politics in this? How should we be thinking about these spending plans in the context of those French presidential elections?
We're 6 months away from the French presidential elections, and last time in 2017, President Macron had actually struggled to win some votes in former industrial heartlands, for example, in the north of France, where the far-right wing is very present. At the time, though, that meant Marine Le Pen. We are now seeing a new phenomenon in the name of Éric Zemmour, a far-right-wing columnist who's been very present in the media. He's written a new book recently saying France hasn't said its last word, where he mentions that France could become an Islamic republic if nothing is done. So very anti-immigration, anti-gay, also warned about the feminist ideology. And you can see all the polls over the past few weeks that there is a Zemmour push in the poll. One poll even showed him at 17%, which goes in pair with the decline of Marine Le Pen's intentions that have now gone below 20%. So all this super important, of course, 6 months before the next presidential elections. A lot could still happen.
Okay, Bloomberg's Caroline Conat live from Paris, previewing that spending plan by Macron, which is coming up in the next few hours. Okay, coming up as well, European stocks take fresh hits from inflation and China concerns. We're going to get back to the markets. This is Bloomberg.
OECD nations need to end coal use by 2030, developing nations need to follow suit by 2040, and we need coalitions of solidarity between countries that still depend heavily on coal and countries that have the financial and technical resources to support transitions, because it is essential that no more coal power plants are built.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kayleigh Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European Market Open. 52 minutes into our trading session, European equity markets moved to the downside, but actually off earlier session lows. Joining us now, Ven Ram from our Markets Live team. I was just about to say getting a bit of respite for risk assets from a slightly weaker oil price, but then the oil price has started going up again, Ven. But at least we're off lows for European equity markets. I know your focus is on bond markets and on FX. And on the bond markets, I spent the last hour of programming with Mark Cudmore, who was ever so excited about two-year yields in the United States. Tell us about the short end, Ven. What's happening?
Well, I mean, we have seen the front end and the back end of the treasury market coming off the lows of the summer. And I do think that there is space for yields to rise from here, albeit in a measured fashion, because the markets are getting prepared for the Fed's taper announcement that is about to come in November by all intents and purposes. Now, a big clue to how the market was positioned comes from the reaction to the payrolls report that we got on Friday. Obviously, that was a very weak data, and then we saw yields go down, and then by the end of the day, yields had rebounded some 6 basis points from the low. And that tells you that going in after a weak data, if treasuries react like that, it suggests the positioning and the mindset of the markets, i.e. higher yields.
Ven, talk to us about the divergence that we're seeing within central banks at this point, and the fact that you see this as something of a sea change now.
Absolutely, Tom. If you go back, if you rewind the tape to last year, we had central banks, for instance, the Reserve Bank of New Zealand was saying they were considering negative interest rates actively. And then suddenly they got inflation, strong inflation data and strong economic numbers. And then they abruptly stopped the LSAP, large-scale asset purchase program, and then they subsequently raised rates. The Norges Bank did a similar thing. They prepared the markets for a rate hike, and they got their rate hike last month. And now we are hearing increasing hawkishness from the BOE in the past week. And as Michael Saunders put it, we should be able to roll out QE at short notice. If we can do that, then we can also wind down those programs at short notice, and that introduces two-way risk into the rates market.
Just a quick word then on green bonds. It's very much the zeitgeist, isn't it, Ven? And we see today the EU has got a record 120 billion euros of bids for its debut green bond. They only wanted to raise 12 billion, I understand. No surprise that we see this oversubscribed. I mean, even the non-green variety, those early issuances from the EU were very well subscribed.
Absolutely, and it's not surprising that they are very well subscribed at all, because there's a clamor for green bonds. If you're an ESG mandated portfolio, you simply need to have those bonds, and the more supply there is, there's so much demand to mop up whatever little supply that is coming through the pipeline, and therefore the oversubscription is not surprising in the least.
Okay, Ben Ram from our MLive team digging into the movements in the markets, of course, the prospects of further, or at least further scrutiny on central banks in terms of rate hike cycles amidst these higher energy prices. We are looking at losses across the Europe Stock 600 of about 0.5%, as Anna was saying, pairing some of the heavier losses we saw at the start of the session. You have a couple of sectors now eking out into the green, including real estate and utilities up both by about 0.3%, Anna.
Yeah, absolutely. So a couple of sectors in positive territory, just a couple. But basic resources very much to the downside, and that is interesting, given we are still very much focused, it feels sentiment-wise, very much focused on higher energy prices. We've talked for days about higher coal prices, gas prices, oil prices, aluminum or aluminium, but basic resources taking a day of pause, a day of respite, and moving down by 1.6%. Also, I was looking at the pound, pretty stable right now on the back of the signs of recovery in the jobs market. Is it too soon to sound the all clear there? That is it for the European Market Open. Surveillance is up next. This is Bloomberg.
did you think at the low point of the Greek economic debacle? What were you thinking about to make Greece recover as it has?
Well, Tom, we took over in July 2019 with a very clear mandate to make the economy grow again. We were hit by the pandemic, but we still managed to implement very significant reforms. And I think we used the fiscal room that was available to us to support the real economy. We're very encouraged by the recent data. The economy grew 16.2% in the second quarter of this year. We revised our forecasts upward to 5.9%, and this may be a pessimistic forecast for 2021. We see lots of interest for foreign direct investment by American companies, European companies. We're making big progress in digitizing the state. We have a very ambitious green transition plan. And overall, I think the mood in the country after 10 years of crisis has significantly changed.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I personally think that Bitcoin is worthless, but I don't want to be a spokesman. I don't care. It makes no difference to me.
Suddenly you've had this upward pressure on oil demand that wasn't in the forecast a month ago. I think it certainly could go to $90.
Central banks have some tricky calls to make, and we all depend on them getting them right.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Now, the global energy crisis sends oil surging. WTI closes above $80 per barrel for the first time since 2014. The power price crunch raises fears of elevated inflation. Once again, Asia stocks and global futures fall as traders await U.S. CPI tomorrow. And road to 2060, Xi Jinping says China has started a 100-gigawatt desert renewable project while the China president speaks at a UN event. So first thing is first, we have plenty going on actually on China, and again, some of these inflation concerns stoked from energy prices. So let's have a look at what the market is telling us. You can see the Europe Stock 600 down some 0.5%. Again, a lot of focus, of course, is on energy prices, the fact that we go into a very busy earnings season next week, and we look at margins. S&P 500 futures also down by similar amount. You can see WTI at $80 a barrel. Now, the other big story, of course, is European bonds. We had that record bidding, the EU surpassing actually France and the UK in terms of what they want for how much money they want to raise. Because of green bonds, they wanted 12 billion, they got 120 billion instead. Now, if you look at the individual indices, you can see the UK, very commodity rich, down some 0.7%, but really it's a similar loss for a lot of these equities across countries. You can see the DAX, the CAC 40 down some 0.7%. So the surge in energy prices is stoking inflation fears for markets. Shortages of natural gas and coal have boosted demand for alternative power generation, with WTI oil holding above $80 a barrel. Well, that could just be the start. The IHS Vice Chair, Daniel Yergin, sees $90 oil ahead.
Well, I think it certainly could go to $90. It's what's happened is that in addition to everything else that's happening, people around the world, particularly in Europe and in China, are switching from some natural gas to switching to oil. And so suddenly you've had this upward pressure on oil demand that wasn't in the forecast a month ago.
About oil being above 100, it depends also on the hoarding behavior. If around the world right now there is a scarcity or perception of scarcity, everybody may be trying to hoard oil, natural gas, or coal in ways that then push the price much higher than the current level as well.
You do see a risk of oil above $100? In what time frame, briefly?
Yeah. Well, in the next few months.
Well, joining us now to discuss all of this is Helen Robertson, our energy and commodities editor in London. So, Helen, great to have you and here in the studio.
Hi.
How long could these price pressures actually last for?
Well, in terms of oil, I mean, what we're seeing essentially is a rapidly tightening market ahead of winter in the Northern Hemisphere. And there are two main things that are driving that. That's OPEC Plus's decision to only gradually increase supplies and return them to the market. And it's also because of the global energy crunch. As we know, there are shortages of natural gas and coal, both here and in China. And what that's doing is it's boosting demand for oil products. So things like diesel, for example, are being used. So what that's doing is it's boosting demand for those products, and then that in turn is pushing up those prices.
So we could see 90, we could see 100, I guess, at this point. Is there anything that could provide some kind of relief?
Increased supplies from OPEC Plus, but I mean the meeting, as we know, was just last week, their latest one. They decided to stay the course, to stick with their plan of gradual increases to supply. So we did hear from Daniel Yergin, I think yesterday, that he expects that there may be some form of political intervention from the US, quite possibly, that the US might ramp up pressure on OPEC Plus to increase supplies. Whether they will do that or not, I think will entirely depend on, the sort of price levels that they need and how they feel the rebalancing process is going.
So, Helen, at the same time, we heard, Xi Jinping basically said, guys, by any means, try and get some supply out there, which also means firing up the coal plants. They were, of course, hit by some flooding. They're going to be back open. Does that help the energy situation?
I think it certainly will, but obviously, as we know, in China particularly, there is a really acute shortage of all these fuels. Just heard Javier Blas, our chief energy correspondent, just tweeted just a few moments ago that essentially China is now looking at funding studies basically to reassess its sort of emissions policies basically, and that's a direct response to the acute energy shortages that it's seeing at the moment. So as we know, it's coal plants in a key producing region. A lot of them have been knocked offline by flooding, which has obviously exacerbated the situation. Some of them have come back, but it's certainly nowhere near the level that's needed.
Helen, thanks so much. Helen Robertson, there, our energy and commodities editor. Now we're joined by Anne-Catherine Pedersen, investment strategist at Allianz Global Investors. Anne-Catherine, I have many questions, of course, on the price of oil, the price of gas, but overall, how concerned are you about the earnings season and the squeeze this could have on margins?
Yeah, that's a great bunch of interesting questions. I think overall, currently, stagflation fears by market participants have risen, and all of those factors that you just mentioned are feeding into that debate. So will higher inflation rates and ongoing and even protracted pressure on prices be combined with a slower growth or even a zero growth. To be clear, we don't think that this is a stagflationary environment in the classic sense, because we are still facing the highest growth rates in 4 decades, but clearly the downside risks have increased. And for risky asset classes, this is a less conducive environment right now of economic activity slowing down, right, and inflationary pressures still flaring up.
So, Anne-Catherine, what does it mean for where you want to put your money, or at least what kind of valuations you'll see going forward?
So generally, against this backdrop of slower growth momentum and still very prominent inflationary pressures, we have neutralized our positions in risky asset classes, so neutralized our global equities versus bonds positions in a multi-asset context. In equities, in this environment of higher rates, we do still think that financials could do well, benefit in environment, and we'll see reemergence of revenue growth here. But overall, we would put less risk on the table right now.
So, Anne-Catherine, give me a sense of exactly what that means for example, gold and some of the inflationary. If you think inflation's coming, do you just buy banks?
Well, it depends. There are more asset classes, of course, that could benefit in an inflationary environment. Generally, it depends on whether you think that this is a transitory environment, a persistent inflationary environment, or something in between, which we might dub a persistently transitory environment. But generally, banks should do well, value cyclicals should do well in the near term. If we are talking about an environment where inflation risks are such that we will face even a double-digit inflation, which is not the base case right now, but risks are rising, then the best hedge, at least in the past, have been commodities.
So, Anne-Catherine, what does it mean? So I don't know whether you need to look at forecasts and actually thinking of a price of oil, or how do you see that dynamic going? Like, what's the one thing that you have to get right in this kind of environment?
Well, there are plenty of things to be monitored in this environment, also beyond the price of oil. Because inflationary risks are not just stemming from the uptick in oil, but also other energy prices, such as gas, which has been discussed already. So what we would watch in terms of oil is, of course, the further decisions by OPEC, but also the demand side. So will demand be still very buoyant as it is right now, or will we see some fading demand here?
Anne-Catherine, give me a sense of actually what you think is too overvalued right now. Is there something that just looks too expensive that you want to get out of?
Well, many asset classes do look ambitious at the current juncture. This is why we will very closely watch the beginning earnings seasons for the third quarter. In equity land, for example, and this is not a new phenomenon, of course, US equities do look more expensive than Eurozone equities, and also particularly UK stocks. In bonds, core sovereign bonds look quite expensive compared with other asset classes. So in a multi-asset perspective, more medium term, we would still believe that equities will fare better than bonds, given that they are very highly priced, and given that we do still expect yields to rise moderately from here at the long end of the curve.
Anne-Catherine, thanks so much. Anne-Catherine Pedersen there from Allianz Global Investors, staying with us, and we'll talk a lot more about the UK shortly. Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. Later on in the program, we speak to the chief executive of Chatterbox, a social impact startup that connects refugees with people looking to learn from their language skills. Our discussion with Mursal Hidayat later this hour. You can send our questions or your questions to IB plus TV Go. You can just tweet me at Flacqua. This is Bloomberg.
from New York City.
We're here in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
Do we really think what we're seeing now is going to move the dial on the medium-term inflation outlook? And in fact, I don't think that that's obvious.
I think there's a transitory component. I think there's a permanent component. And you see it with wages and commodities and all the things like that. So, yeah, you're probably at an inflection point.
And I'm on the camp of those who believe that those are in the main transitory. I think that central banks will be able to get through them without having to depart, very significantly from the plans that they have.
As the central banks taper, rates will go up. It's not terrible as long as inflation, isn't out of control.
There's a lot of debt out there, and movements in interest rates will have a big impact.
Central banks have some tricky calls to make, and we all depend on them getting them right.
Well, inflation concerns topping the agenda at the IIF annual membership meeting as central bankers face up to rising price pressures. Anne-Katrine Petterson from Allianz Global Investors is still with us. Anne-Katrine, we're talking a little bit about some of the pitfalls and the energy prices, but is inflation transitory, or do you believe that actually it could be much more sticky, and so we will see maybe a market correction if they don't start pricing it in more robustly?
Thanks, Francine. That's a very important question. Well, to be honest, I'm not in the fully just transitory inflation camp. There are, of course, a couple of factors currently that lead to the spike in inflation, but we have to keep medium-term rising risks of inflation in mind as well. These are based on a couple of factors, again, excessive monetary growth, a change in central bank's reaction function, such as the Fed's average inflation targeting. Demographics play a role, a slower globalization and rising protectionism on a national level will also add to increasing costs, and there are many more to watch. And markets right now, and also central banks, seem to slowly but increasingly realize that there is more than just transitory factors that feed into the current inflation debate.
Yeah. And Katrina, this goes back to the million-dollar question. Do value stocks finally outperform growth stocks? And this is something that we've been speaking about for months, if not years. Is now the time?
Yeah, so actually value stocks have fared relatively well, but compared with growth stocks, they didn't deliver the outperformance that some had hoped for. I think what we will need for value stocks to perform and outperform growth stocks is an environment not just of rising rates, but also of rising inflation, but rather well-behaved inflation going forward. And currently, the value cyclical stocks, so this combination should do well, and let's see how the macroeconomic backdrop evolves going forward.
What does it mean, Anne-Katrine, for example, how you view UK assets? So, they were meant to be one of the best performing assets. Now a lot of questions about energy, about maybe the consequences of Brexit. And of course, then there's the BOE, who could be the first one by quite a mile, the first one to hike interest rates.
Yeah, so in the United Kingdom, as also in other regions, we do increasingly see a more uncomfortable mix of slower growth on the one hand, because UK economic growth peaked in the second quarter already and has moderated ever since. And on the one hand, rising inflationary pressures, which could lead the Bank of England to hike rates as the first achieved for central banks. A bank. So overall, this is an environment that for the broader UK equity market is less conducive. And we currently in a multi-asset context would favor a neutral position in UK stocks.
And Katrina, when you look at some of the emerging markets, and it could be Turkish lira moving on some of the things that we heard overnight, or it could be some of the other ones. What do you do with the emerging markets at this juncture?
So as a matter of fact, emerging market equities have lagged domestic market equities and are hence more attractive from a valuation standpoint. But we have to keep a couple of factors and headwinds in mind related to the pandemic, which is still a challenge for some of the emerging markets, but also related to the normalization of the United States Federal Reserve, which will likely go hand in hand with rising real yields, which in the past have increased the vulnerability of emerging markets assets.
Anne-Katrine, thank you so much for joining us today. Anne-Katrine Pedersen, their investment strategist at Allianz Global Investors. Now, we're also getting some live pictures of Emmanuel Macron over in Paris, I believe, his team unveiling the 2030 investment plan. So we'll have plenty more, of course, on that. We'll also look ahead to the presidential election of France. We'll be live in Paris shortly. This is Bloomberg.
did you make the decision to move to the Bahamas of all the options out there?
We've been looking at the Bahamas for a while. They're one of the first countries to roll out any comprehensive regulation for cryptocurrencies, which we think is extremely important for the space and a really positive sign.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Well, over in France, President Macron is set to unveil his highly anticipated 2030 investment plan of up to 30 billion euros to be spent on key strategic sectors over the next decade. Well, let's get straight to Caroline Conant, who joins us now from Paris. So, Caroline, what exactly is in this new French stimulus plan?
Clearly, Emmanuel Macron wants to show that he's thinking long-term investment beyond the pandemic, beyond the emergency response of the recovery plan of 100 billion euros last year. This time, in this new stimulus plan, we expect 30 billion euros of new investments in some key strategic sectors such as batteries, hydrogen, biotech, creating new biomedicines, or, for example, small nuclear reactors, which Emmanuel Macron thinks is the way forward, especially at a time of an energy crisis. He says that small nuclear reactors actually could be a good replacement for fossil fuel generation. So all this thinking long term, reducing the dependence of France from China or the US. But of course, critics have said that this plan should have been presented earlier. 2 weeks ago, you had the French budget. This wasn't included, so this will add pressure on public finances.
So, Gaudian, how does this play into the election cycle? I mean, we're about 6 months, maybe 7 months away from France voting.
We are 6 months away, and clearly Emmanuel Macron is thinking about the elections with this plan, because last time in 2017, he actually struggled to win some votes in some former industrial heartlands, such as the north of France, where the far right wing, for example, of Marine Le Pen was very present. But we're also witnessing a new media phenomenon in the person of Éric Zemmour, this far right wing columnist who's very present in the media. He's got a lot of airtime at the moment with his new book saying France hasn't said its last word, where he has very controversial positions about immigration, saying, for example, that France could become an Islamic republic if nothing is done. Clearly, this anti-immigration, anti-gay, and also opposed to the feminist ideology, this resonates into some low-income French electorate, but also some very conservative bourgeoisie in France. So Éric Zemmour is the person to watch, and that goes in pair with the decline of Marine Le Pen in the polls.
Gaudian, thank you so much. Gaudian Conan there live from Paris. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. A parliamentary inquiry has found the UK government made serious mistakes in its early handling of the COVID pandemic. The sharply critical report says many lives would have been saved if a full lockdown had been imposed more quickly. It said the country adopted a fatalistic approach to COVID early last year and failed to learn from East Asian countries that halted the spread using swift lockdowns and mass testing. The IMF board has decided to keep Kristalina Georgieva as managing director, reaffirming full confidence in her leadership. The lender had been examining allegations of improper actions during her first time working at the World Bank. This is Bloomberg. I'm Leanne Gerrans.
So the 1972 Madison Square Garden eyelet jumpsuit, which is arguably, from what we're finding out, probably one of the most important jumpsuits of Elvis's entire career. So it marked so many milestones really for him. It was used for an album cover. It was used when he performed Madison Square Garden, and he was the first performer to ever sell out 4 nights straight in Madison Square Garden. So he really started that whole thing that we see now in pop culture, where when you make it big, you do Madison Square Garden. So we're super honored to have it. I can honestly say that COVID has been unbelievable for internet-based and e-commerce businesses, because we have a captive audience. We have people home that really want something to do and need entertainment. So we do our best to try to give it to them.
Watch Bloomberg Surveillance to learn how to look at markets, how to look at trends, and how to look younger.
What do you think, John? Botox, or do I really need to get something done?
I think, Tom, if we just change the style up a little bit.
You think so?
Yeah,
You look
drop
great.
the bow tie. Drop the bow tie.
What,
Drop
skinny
the bow
tie?
Yeah. I always say, this is my line, whenever anyone in America has a go at me about a skinny tie, the older you get, the wider it gets.
Oh, really?
Until it becomes a bow tie.
This is a bow tie.
Until it becomes so fat, you just sort of...
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Well, the global energy crisis sends oil surging. WTI closes above $80 per barrel for the first time since 2014. The power price crunch raises fears of elevated inflation, while Asia stocks and global futures fall as traders await U.S. CPI tomorrow. And road to 2060, Xi Jinping says China has started a 100-gigawatt desert renewable project. The Chinese president speaks at a UN event. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. So let's quickly check on the markets. An overview picture is basically there's still quite a lot of concern on inflation out there. And that is putting a little bit of pressure on some of the stocks, especially as we get into earnings season, where special attention will be put on margins. If you look at the inflation risks, they're continuing weighing on markets across the board. Again, it's rising energy costs that are worrying investors and signs of widening regulatory scrutiny by China. So we've heard from the Chinese President Xi Jinping this morning speaking at a biodiversity summit. Well, President Xi announced new wind and solar projects have begun and said China intends to set out more precise details on how it will hit peak carbon emissions in key areas. Now, it comes as China's widening power crisis has prompted policymakers to rethink the pace of the nation's energy transition. Let's get more now with our energy reporter, Dan Murtaugh. So, Dan, what were the key takeaways exactly?
Well, the big takeaway is this, he talked about this first phase of 100 gigawatts of wind and solar out in China's deserts, which, there's all kinds of definitions we're not sure of yet, but it's a massive project. It's as much power generating capacity as all the power plants in the United Kingdom combined. So it really shows that, China's commitment to renewable energy is still strong, which I don't think is much of a surprise. But at the same time, this is coming at the same time that Li Keqiang, the Chinese premier, has sort of indicated that, he might want to tap the brakes a little bit on China's long-term climate plans in the midst of the power shortages that are hitting the economy and may hit people in their homes this winter.
Right. So what does this mean for China's energy transition?
I think it means that we're going to see a perhaps slower, more nuanced transition than something that I think a lot of climate activists are hoping for. I think China is still going to, push forward with renewables and, put itself into place for a long-term green energy system. But in the short term, it's going to still rely on coal and fossil fuels, which are very polluting and which are, adding to the carbon in the atmosphere that's driving, bad weather events all over the world.
Dan, thanks so much. Dan Murtaugh there with the very latest on some of the things we're seeing from China in the energy space. Now, we're also looking at live pictures of Emmanuel Macron, the team there in Paris, unveiling the 2030 investment plan. The President Macron has just started speaking. This is part of his election campaign, but then if it also gets passed through the Assemblée Générale, then National Assembly, Assemblée Nationale rather, then it can go ahead even if he does not get re-elected next year. Coming up, we look at this morning's UK labour market data and what this could mean for the Bank of England. This is Bloomberg.
田文雄君を衆議院規則第18条第2項により本院において内閣総理大臣に指名することにこの際暫時休憩いたします。
How far will the Bloomberg surveillance team go to get the inside story?
The UK will deploy its reserve tanker fleet this afternoon.
There we go.
Tom McKean and I might be part of the reserve fleet
We might be.
that gets deployed.
This is more complex than people think. The steering wheel's on the wrong side of the truck. That's the first thing.
Oh my God.
Thank you to the gentleman out on Twitter that captured this moment.
Wait, question.
Wonderful.
Who of you has a driver's license?
You don't need that.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, British companies pushed the number of workers on payrolls above pre-pandemic levels last month, an indication of strength in the labor market. So let's get more with Bloomberg's Lizzie Burden. Hi, Lizzie. So what does the employment picture actually look like now?
Looking strong, Francine. Payrolls climbed by a record number. Underlying wage growth rose. So that inflationary pressure emboldens the Bank of England to raise rates in December as money markets are betting. It already saw inflation tipping past 4% in the fourth quarter, twice the bank's target. Now, the risk was that the bank would choke off the recovery if there was a post-furlough spike in unemployment. But today's numbers don't suggest that that's on the cards. Unemployment ticked down from 4.6% to 4.5%. Now, you could ask what will happen to the million or so workers who were the last left on furlough at the end of the scheme, but the numbers today suggest that many of them will actually be absorbed into jobs. We won't get the October print for the unemployment numbers until December the 14th, so right before the Bank of England's December decision. But all the numbers that we're getting so far build the case for that December rate hike. The October print in December likely to just rubber stamp the decision.
Lizzie, thanks so much. Lizzie Burden there with the very latest on that UK jobs report. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. EasyJet is to boost capacity to about 70% of 2019 levels this quarter as the easing of travel restrictions in the UK leads to a surge in bookings. The discount carrier says it generated positive cash flow in the peak summer months of July. September, EasyJet flew at 58% of pre-pandemic levels during the summer months. Now, Southwest Airlines has apologized for cancelling more than 3,000 flights over 4 days. The Dallas-based carrier says a shortage of workers overlapped with storms and an air traffic control interruption. Southwest says it has hired about half of the 5,000 workers it wants to add before the end of the year. Jamie Dimon is forecasting tighter regulation for cryptocurrencies. The JP Morgan CEO told the Institute of International Finance that anxiety around stable coins and the asset class more generally is growing in Washington.
I personally think that Bitcoin is worthless, but I don't want to be exposed to it. I don't care. It makes no difference to me. Our clients are adults. They disagree. That's what makes markets. So if they want to have access to buy or sell Bitcoin, it's hard. We can't custody it, but we can give them legitimate, as clean as possible access.
Now, Bloomberg understands Syngenta will get an update on its planned Shanghai IPO this week. Syngenta's share offering in Shanghai, which could be the world's largest this year, hit a roadblock after the exchange suspended its application pending an update to information about its earnings. Bloomberg is told about 50 other companies are also facing a delay to their Starboard IPO applications. And a new California law will require big retailers to create gender-neutral departments for some toys and childcare items. By the start of 2024, larger retailers will have to maintain gender-neutral sections for a reasonable amount of kids' items. Though clothing isn't included, the legislation is the first of its kind in the US. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, Britain's Brexit Minister David Frost will deliver a speech today calling for significant change to the Northern Ireland Protocol. Now, he'll also demand to scrap the authority of the European Court of Justice over the deal, something that the EU has already said they won't go for. So talking about Brexit is Bloomberg Opinion's Therese Raphael now. She's the author of From Brexit Deal to Trade War in 365 Days, which you can read on your terminal by typing OPIN. Go. Therese, great to speak to you today and in studio, because there's so much questions I have about Brexit. So first of all, we're looking at a couple of days or weeks of acrimony as the EU says they're not renegotiating, but they'll lay out something tomorrow. And David Frost today saying he wants to renegotiate the protocol.
Yeah, I think it's probably more than a couple of weeks of acrimony. This has been building up since July, when the UK issued a command paper setting out its demands, which is effectively scrapping the Northern Ireland Protocol. That is the linchpin to the Brexit, the Brexit agreement, the trade agreement. What happens now is the EU puts forward its proposals, and the mood music running up to that is the UK pretty much preparing to say not good enough. And then we'll have a period of negotiations, which may include the UK triggering Article 16 of the Northern Ireland Protocol, which allows them to suspend part of that. Now, I don't expect that we're going to get a lot of resolution here before the COP26 summit. I don't think the government really wants a big battle on its hands going into that big summit. So we'd expect that some of the real nitty-gritty of these negotiations is going to happen after that.
So do you think that actually they will renegotiate? Or, I mean, could this be full-blown war? I mean, then there's the clearance also coming up in June 2022. Like, how ugly could this get?
Yeah, I mean, that's the real question. So the EU is saying this is not a renegotiation. The Northern Ireland Protocol is set in stone. It's a treaty. It's calling it a discussion. I mean, you can call it what you will, but the question is really, if the UK is prepared to just scrap the whole thing, what happens next? And that's where we get into these discussions of a trade war. What is a trade war, really? What would it look like? Does it mean setting aside the entire trade cooperation agreement, the Brexit deal, and beginning really a tit-for-tat tariff war? The EU is very, has a lot of tools in its box if it wants to do that. But I think we're still a long way from that point, and the history of these negotiations tells us that we tend to get an escalation of rising of tensions and then some kind of a compromise. But really, the war of words here has, suggests that the UK wants to go in quite hard. And the main question is, what do they do about the European Court of Justice?
Right. Which the EU has said they won't back down on. Thank you so much, Therese Raphael, there from Bloomberg Opinion. Now, coming up, we speak to the chief executive of Chatterbox, a social impact startup that connects refugees with people looking to learn from their language skills. Our discussion with Morsal Hadayat. That's coming up shortly, and this is Bloomberg.
Blackout risk, those energy prices spiking?
Well, in the first instance, we will manage it over the next while. I think the key agenda item for Ireland on the energy front is wind, and we've been great developers of onshore wind. The next decade in Ireland will be offshore wind, and we have streamlined our planning application framework for investors so they have certainty in terms of applying to invest in terms of offshore wind infrastructure in Ireland. So that will be a key agenda item of ours, and renewables. We have a very strong climate component in our government and in our government programme, and that of course is not disconnected from the energy agenda. And there will be challenges of that, there is no doubt, but we are making considerable progress.
Are you worried about the here and now? Are you worried about blackout risks? Are you worried about the amount of consumption data?
Data is taking up considerable demand in energy terms, but we have been robust in terms of meeting that to date.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
About oil being above 100, it depends also on the hoarding behavior. If around the world right now there is a scarcity or perception of scarcity, everybody may be trying to hoard oil, natural gas, or coal in ways that then push the price much higher than the current level as well.
You do see a risk of oil above $100? In what time frame, briefly?
Yeah. Well, you know, in the next few months.
I know you're not hot on Bitcoin traditionally. At any margin, do you agree that Bitcoin can be a hedge against inflation rather than gold?
No, I don't agree on that because the price of Bitcoin has gone up by, I don't know how many 100 percentage points this year alone, while inflation expectations have gone higher, but only marginally. So I don't explain the rise in Bitcoin prices as driven by fear of high inflation. I worry about inflation, but the number of inflation not such to justify that rise in Bitcoin prices. And I think that the term cryptocurrency is a bit of a misnomer because Bitcoin or other unquote cryptocurrencies are not a unit of account. They're not a scalable means of payment. They're not a stable store of value over goods or over wealth. They're not even a single numeraire. So calling them currency is a misnomer. Some people say they're an asset, but typically an asset gives you some source of income and cash flow. Stocks give you dividend, bonds give you a coupon, loans give you some interest, real estate gives you rent, or they have some use or utility like commodities or like real estate and housing, or like in the case of gold, they have also some other use or utility like in industry, gold, or as jewelry. And has been historically for 4,000 years a stable store of value against not just inflation, but also deflation, financial crisis, political and geopolitical risk. So I don't have a fundamental model to price something that doesn't have any income, doesn't have any use, doesn't have any utility, is not scalable. So I don't know how to price it, frankly. I think it's just a self-fulfilling demand that leads to a movement in prices, but doesn't have, in my view, a fundamental intrinsic value.
Well, Nouriel Roubini, their chief executive of Roubini Macro Associates, talking about the price pressure we've seen in the energy markets and also giving his take on cryptocurrencies. Now, the Women of the Year Awards were held this week, and the winner of Barclays Women in the Community title is Mursal Hedayat, the chief executive of Chatterbox. It's a digital platform that trains and employs refugees as language teachers and is used by businesses including BNP Paribas. While Chatterbox is meant to close the gap between refugees with qualifications and the labor market, creating pathways into professional careers and displaced professionals. Mursal Hedayat joins us now. Mursal, first of all, congratulations on the award and on a wonderful business that also bridges these two things that are so important to society. How big can Chatterbox be? What kind of uptake and support have you been getting from companies and businesses?
Well, at Chatterbox, we're reimagining what the job centre should look like and be for particularly people from marginalised communities. When I arrived in the UK at just a few years old, my mum was a civil engineer, having graduated from Kabul University. And in the world's, one of the world's largest economies, the UK, she struggled to find any work through the traditional job centre. So really what Chatterbox is doing is reimagining that state function, using the power of AI and technology. And indeed, we did start out as an organisation geared towards supporting refugees into work via language learning, but the vision is much larger and the need amongst talented people for work is also much more significant.
So, Marcel, I don't know whether you actually have employees or whether they're considered freelancers, but how big is Chatterbox right now and how big can it be in 2-3 years?
We have about 300 job seekers currently on the platform. Our team is approaching 20 people. We've just closed our seed round of investment, actually, backed by venture capitalists across Europe. So we do have significant ambitions. I don't think that leveraging the power of business to achieve social impact goals is antithetical. I think we can both be super ambitious as a business for both profit and impact.
So, Marcel, give me a sense of, for example, some of the companies, I think BNP Paribas uses your, how do they use your services exactly? Is it to try and train some of their employees to learn another language? Is it support and services? How does that play out?
Companies like Unilever, McKinsey, BNP Paribas, as you mentioned, are very keen on expanding their workforce, particularly towards talented people who are often overlooked from the refugee community and beyond. And Chatterbox helps them do that in two ways. First, they can purchase our services, for example, a language learning service, which is an online learning software used by employees at these corporates. And second, they can actually hire directly through our talent pool. This is a new angle for Chatterbox, and it's one that I think is going to be much needed.
So, Marcel, give me an idea of how, you say AI enabled. How is the use of AI actually transformative in language learning for Chatterbox?
Within language learning, I think the time when we've all felt the most enthusiastic to learn a language has been sitting around a dinner table where every other person is speaking Italian, and you've never wanted to speak a language more than at that moment. Well, we're building technology to enhance that feeling of integrative motivation. So the feeling that you get that you want to learn a language to become closer to other people. So the matching algorithm, for example, that we have at Chatterbox, pairing language learners with their ideal coach from our community, really helps to build and sustain motivation. We have, for example, the chief scientists of the UK Department for International Development learning French from a Congolese medical doctor on Chatterbox. And these are the kind of pairings and the usage of AI and matching algorithms that Chatterbox deploys currently. In the future, we'd also like to deploy this algorithm to help job seekers find better suited jobs and training relevant to their interests, but staying squarely within the focus of online work. Because, the pandemic has had many negative impacts in society, particularly on marginalized groups and the unemployed, but it's created a wealth of opportunities online, not just in online language learning, but also in many different careers.
So, Marcel, there's a massive, mismatch here in the UK about, employment or job seekers and some of the skills that they have. Could Chatterbox or similar online platforms also help to retrain to make, a society that matches the skills with the jobs actually required?
Exactly. Some companies like Salesforce need 3.5 to 4 million Salesforce qualified analysts, salespeople, solutions engineers in the next few years. Where is this talent going to come from? They're not all going to be graduates. Some of them will be adults returning to work, mothers returning to work, refugees returning to work. And Chatterbox wants to be the world's largest community for what we call career relaunchers. Refugees, women, older workers returning to work after career breaks. And we want to direct them towards these very high demand jobs in the online economy, from language learning and beyond.
All right, Marcel, thanks so much. Marcel Hedayat, they're co-founder and chief executive of Chatterbox. Now, we'll have plenty more, of course, on that throughout the day. We'll also look at what Emmanuel Macron and his team are unveiling for the 2030 investment plan. Now, the focus, of course, is on certain sectors that he'll want to highlight. Again, Mr. Macron faces a pretty difficult March 2022, March into April, when there's a lot of focus on, of course, what Mr. Macron will do in the presidential election. So we'll look at that, and then we'll look at the markets shortly. Stocks and U.S. futures dipping, inflation risks, putting the bubble concerns right at the forefront. So stocks and U.S. equity futures falling today. Traders focusing on the risks that rising energy costs will actually keep inflation elevated and signs of a widening regulatory scrutiny by China. Now, if you look at some of the cyclical stocks, they're under pressure. If you look at banks, for example, auto parks, maker, miners faring the worst. So oil holding above $80 a barrel amid a power crisis. From Europe to Asia, China's thermal coal futures also surging to a record for a second day. The energy crunch is squeezing supplies of aluminium, whose price hit a 13-year high. So the focus is firmly on the energy crisis. The focus is, of course, on some of the other things that we heard from China and cues of regulatory crackdown that we've been talking about all day. Global markets struggling to shake off worries that inflation, spurred by this energy crunch and pandemic-related supply chain snarls, will sap company profits and economic expansion. A reminder, next week is when we have a lot of the earnings, and next week is when we will see the exact impact on some of the margins. Financial firms this week kicking off the third quarter earnings season, heralding a key test for investor confidence. And then we have some upcoming reports from the U.S. Consumer Price Index, retail sales, helping to inform market expectations about the likely timeline for Federal Reserve tapering and any eventual rate hikes. Elsewhere, we saw a rally in Bitcoin, pausing at about 57,000 a level. U.S. benchmark Treasury yields and the dollar pretty much steady. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin alongside Katie Lines in New York. This is Bloomberg.
They don't know what to say. Again, they can't even fathom that they're out of Afghanistan. They're still in a state of shock and can't believe it.
What we have built through this process is essentially a mechanism for getting oppressed women and girls out of Afghanistan. So we're actually going to circle up and see what resources we have left, to see what options we have left, what mechanisms we have left, and actually look at potentially trying to get more women and girls out of the country as well.
We've been through a lot, us as a team. I know sleepless nights, but you know what? There's nothing more satisfying than knowing that you've saved many lives, and will continue to support these girls on their missions.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
So although we do think there's going to be lower returns moving forwards, we're not overly concerned about the downside risk to equities from here.
But on a 12-month view, we think bond yields will go higher. That will mean financials in particular outperform, and with that value.
Suddenly you've had this upward pressure on oil demand that wasn't in the forecast a month ago. I think it certainly could go to $90.
This is Bloomberg Surveillance, early edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Well, it's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong. On this Tuesday, October 12th, our top stories today. Rising concern over rising prices. Investors focus on the risks that higher energy costs will keep inflation elevated. A guessing game in China, who will be the next big developer to face a credit crunch. Meanwhile, there's a new crackdown on corruption in the financial system. And surviving the scandal, Kristalina Georgieva will remain as head of the IMF following an investigation. Now, there's quite a lot going on in the markets. We also look at U.S. data tomorrow, Kaylee. And if you look at the markets today, they're really focused on energy prices, still higher and could go even higher, and then focusing on a widening crackdown in China.
Yeah, those higher commodity prices, Francine, have really stoked fears of inflation in the last 24 hours. And we did see that evident in the Asian session. Broadly read across the screen when you look at GMM Go on the Bloomberg terminal. Stocks mostly down, currencies mostly down, bonds mostly down as well. When it comes to the major equity benchmarks, you did have Japan lower, China lower, Hong Kong really the underperformer, down about 1.4%. There's a couple of things going on. Of course, in China, you do have ongoing concerns around the health of the property sector and contagion risk stemming from Evergrande into the likes of Cinex and Fantasia. You also have China expanding a regulatory crackdown, now actually looking at the financial sector and reviewing it specifically. In China and in Hong Kong specifically, though, technology stocks were actually the big laggards, probably a higher yield story putting pressure on the likes of Alibaba and Tencent. The Hang Seng Tech Index as a whole down about 3%. Of course, as Francine alluded to, China also dealing with a power crunch as well as flooding in coal mines, and that drove thermal coal futures to a record for a second day. And then a couple of foreign exchange stories to point out. One is the South Korean won breaking below that key 1120 level. That is after the central bank did not deliver a second in a row rate hike. But your big outperformer within Asia is the Thai baht, stronger against the dollar by 0.7% as they lift mandatory quarantine to boost tourism in Thailand. As for the picture here in the U.S., we are awaiting that CPI and earnings tomorrow, but on this Tuesday morning, futures are in negative territory, though well off of session lows. S&P E-minis right now only down about 0.1%. In the bond market, we're steadier on the longer end of the curve, essentially unchanged on the U.S. 10-year yield at 161, but there is more movement in the short end. The 2-year yield is up 3 basis points to 34 basis points at the moment, which is the highest going back to March of 2020. And then finally, have to keep an eye on oil as well, Matt. WTI is relatively unchanged on the day, but still holding above $80 a barrel.
Yeah, definitely watch oil. The price is rising, Kaylee, in terms of energy and commodities really hitting not only consumer expectations, as we've seen out of the University of Michigan, the Consumer Conference Board, but also German investor expectations. We're just getting breaking ZEW numbers, and they are worse than had been anticipated. We were looking for a drop, and they've dropped even further. So this is really bad news, especially for people like Danny Blanchflower from the University of Dartmouth, where he is an economics professor, who says this kind of thing indicates that a recession is near, if we haven't already entered it. I think you're going to start hearing the word recession a lot more. Take a look at stocks. They're down across the board in Europe. Pretty much every major benchmark is down. You can see Portugal gaining a little bit, but Spain is down, as is Italy. Germany, France, and the UK are doing even worse. And then there's some really interesting geopolitical stories here. The Turkish lira fell to its lowest level ever against the US dollar. And if you look at a max chart, if you put TRY currency GP space M in your Bloomberg, you can just see it get worse and worse and worse and worse. Now the President Erdogan is saying that he's willing to use force in order to eliminate threats coming out of Syria, and that has really roiled the markets. So keep your eye on the Turkish lira. Francine?
Yeah, keep your eye on the Turkish lira and on the EU green bonds. This story is also absolutely amazing. Matt, if you look at the EU, it pulled in a record $156 billion of orders for its first green bond, and they were looking to raise $12 billion, so it's 10 times more than they were trying to raise. Now look at what else is coming up ahead, or what else is happening today. The EU set to offer the largest ever green bond. That's what I was just touching on, and it aimed to raise 12 billion euros. It came in 156 billion. Leaders gather in Kiev for the EU-Ukraine summit, where the focus will likely be around the energy crisis. The G20 trade ministers meet in Sorrento, Italy, beautiful part of the world. The U.S. jobs opening data is released at 10 a.m. New York time, and then 11:15 a.m. New York time. UK Brexit Minister David Frost is set to give a speech ahead of the EU laying out its thinking on the Northern Ireland Protocol. So oil holding above $80 a barrel, and expectations that the global power crisis will lift demand and tighten global balances. Well, let's get more on this with Bloomberg's energy and commodities editor, Helen Robertson. Helen, great to speak to you. So if you look at some of these longer-term shifts, is there anything that could actually provide a bit of relief?
Hi there. So as you mentioned before, obviously what's happening at the moment is that we've got a rapidly tightening oil market, and there are a couple of reasons for that. The main one is what we're calling fuel switching, which is essentially the increased demand for gas and power is increasing demand for things like fuel oil and diesel. And what that's doing is it's exacerbating a situation of already sort of tightening supply. Now, there is something that could be done, which is that OPEC Plus could change their policy. They could decide that they're going to increase the pace that they return barrels to the market. They did not do that last week. It'll be interesting to see if prices continue to rise, which is what analysts seem to think will continue to happen if this situation continues, whether they'll be under greater pressure to do that, especially from the White House. We heard from Daniel Yergin, who's a famed oil historian, that yesterday he expects that there may be increasing political pressure from the White House.
Yeah, I was going to ask about that because I watched that interview on surveillance yesterday as well, Helen. Is the Biden administration going to go to the Saudis and say, please help us out a little bit?
I mean, that's an interesting question. Obviously, the Saudis will not act unilaterally. As we know, they're part of this alliance called OPEC Plus, and so Russia is a key member of that. So any decision that Saudi Arabia takes will have to be in agreement with all members of the group, especially Russia. So I think, as I said, I don't think there's likely to be any movement on that unless we see a just, sort of completely unexpected surge to over $100 a barrel, for example. But that's not what analysts are expecting at the moment. But I mean, several banks just in recent days have upped their price forecasts. So they're clearly expecting this pressure to continue.
Helen, thank you so much. Thank you so much. Bloomberg's energy and commodities editor there, Helen Robertson. Now, CINIC has become the latest Chinese real estate firm to warn of imminent default as a rising contagion risk leaves investors guessing on who else may face a credit crunch. Well, let's get straight to Tom McKenzie, who joins us with the very latest. I mean, we just don't know who it's going to hit next, Tom.
We don't. So we've got a long list now. So CINIC, as you say, warning of imminent default. This is on a $250 million bond that's due October the 18th. It follows on from Modern Land and Sinuan, both either saying that they wanted to push back their dollar payments or rework the terms of their payments. And then you had Fantasia Group, was a smaller developer, but they defaulted. That was a surprise last week. Evergrande was due to make some coupon payments yesterday, according to people that Bloomberg's been speaking to. Those payments haven't been made. So Evergrande, again, racking up its missed payments. They have this grace window period. We're watching that very carefully. But as you say, it looks like we're facing now the potential of a wave of defaults amongst China's developers unless China's government relaxes its controls and its curbs on the property sector, which so far it's given no indication of doing.
Yeah, it doesn't look like they're going to relax curbs at all. In fact, they're going to inspect the inspectors now. We see headlines saying that they're going to look into the financial regulators, look into the banks, look into the insurers, and do, I guess, a deep-rooted, deep dive to find out what the problem is.
yeah, this within the context of China, this is not remarkable. But globally, this is fascinating. They are, as you say, going to be probing and investigating the People's Bank of China, the banking regulator, the insurance regulator, the stock exchanges, the heads of all the biggest state-owned banks. This is significant, possibly not so much for the markets. We'll see how it plays out, whether it leads to changes in regulation, but it's certainly significant for the executives who sit atop these organizations. How long it's going to go through and what kind of scalps they're going to collect at the back of this is in focus. What they said is they're concerned about corruption amongst these organizations, and they're concerned as well about the proximity of these regulators and these banks to private companies like Ant, which of course had its IPO pulled, and DD as well, which listed in the US, and we knew what happened to that. Within the context, the arm of the government that is pursuing this investigation, the Central Commission for Discipline Inspection, it is a feared arm of the Chinese government. You already have about 1.5 million Chinese cadres and officials who have been taken out as part of this long-running anti-corruption campaign. Some of them have lost their jobs, some of them ended up in jail, some of them have ended up dead. So this is very serious indeed.
Really important context. Thank you so much to Bloomberg's Tom McKenzie. Meanwhile, the IMF will keep Kristalina Georgieva as its managing director. The fund's board reviewed accusations that she improperly influenced a World Bank ranking of China's business climate. Georgieva has denied any wrongdoing. Joe Matthew, Bloomberg Washington correspondent, joins us now from D.C. So, Joe, obviously the U.S. is the largest shareholder in both the IMF and the World Bank. What role did the Biden administration play in this decision?
Well, we do know, for starters, as we've been reporting at Bloomberg News, that the U.S. in fact considered calling for Georgieva's resignation. That did not happen. And while the results of this review are conclusive, there's still quite a bit of skepticism here in Washington on both sides of the aisle and on both ends of Pennsylvania Avenue. We understand that Treasury Secretary Janet Yellen in fact, told Georgieva in a call that that report raised legitimate issues and concerns, and protective steps, she said, must be taken to reinforce data integrity and credibility at the IMF. Not exactly a ringing endorsement. We also got a statement from Congressman French Hill, Republican who serves on the House Financial Services Committee. He says, quote, Georgieva's continued tenure as head of the IMF would weaken the credibility of the institution. So if perception is reality in politics here, this is an issue that could continue to hang over her tenure at the IMF.
So, Joe, the debt ceiling fight has been delayed to December, so the market is largely ignoring it, but actually Washington is still on edge over it.
Well, yeah, it's not done yet. You know, we were cheering a deal, if I can use the word cheering, at the end of last week, just to have some kind of a break in a short-term deal to raise the debt ceiling that would bring us to December 3rd. That also happens to be the day, however, that government funding runs out. Now, the House is expected to codify that deal today. They'll pass that legislation, and they're already on to the next debate. It's a real Groundhog Day scenario where lawmakers, as soon as this is passed, will have to begin work on the very same issue again. The difference this time, though, is that Mitch McConnell, the Republican leader in the Senate, says, don't look back to me for help. Republicans are done. We're not touching the debt ceiling, and Democrats will have to go it alone, suggesting that they may well have to use reconciliation as a way to manage raising the debt ceiling to avoid a default and also to fund the government, to keep the lights on past the 3rd of December and avoid a shutdown. Both of those deadlines will be colliding on the very same day as we look ahead to the end of the calendar year.
So much to look forward to in the next 2 months. Thank you so much to Bloomberg's Joe Matthew. And of course, you can listen to Joe every weekday on his radio program, Sound On. That's at 5 p.m. Eastern Time on Bloomberg Radio. And now let's get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. And I have to begin with Southwest Airlines. It's had a bit of trouble over the last 4 days, canceling more than 3,000 flights. They blamed that in part on the weather, but also staffing is a serious issue. The airline saying that it just needs more staff in order to end the disruptions. That stock is down about 0.7% after falling more than 4% yesterday. To the upside, though, is Square. It got an upgrade over at Atlantic Equities. The analyst raising the stock to overweight with a $300 price target. That's upside of around 29% from yesterday's close. This morning, it's up about 1.5% at 235. And another upside mover is Merck. Of course, it is pushing to get its COVID-19 pill approved by emergency use authorization by the FDA. That stock is up 1.5% before the bell, Francine.
Yeah, a lot of actually chatter also that some countries are already trying to buy the pill even without approval. Kaylee, coming up this hour, central bankers facing a tough dilemma will weigh the global risks with Christian Keller, a former IMF official who's now head of economics research at Barclays. And Jamie Dimon calls Bitcoin worthless. We'll have more on Dimon's views on cryptocurrency, plus oil at 100. We'll also hear exclusively from renowned economist Nouriel Roubini on energy prices and much more. This is Bloomberg.
China's growth because it is already slowing. Chinese manufacturers are curbing production. This is the latest shock to global supply chains, already delayed by, part delays, chip shortages, saddled with soaring commodity prices as well.
Well, Haslinda, when we've seen a lot of supply chain disruptions at the beginning of this COVID pandemic, and then, supply chains became resilient and it really moved goods around, especially medical goods and supplies. But now, at this part of the pandemic, we are seeing disruptions again, and discontinuities. And that is because of what we spoke about, the demand that is pent up. And of course, if you have factories slowing down and, not being able to produce as much, that is going to impact growth and the recovery.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Francine Lacqua in London and Matt Miller in Berlin. Well, Matt, inflation fear seems to be the name of the game this morning, and you're seeing that in the short end of the U.S. yield curve.
Yeah, absolutely. Seeing really big gap in a really big gap in the 2-year. If you take a look at the chart that I've got, if you're watching us on television, you'll see what I mean. If you're listening on London DAB digital radio, I'll just tell you that we had a jump in the yield from basically 30 basis points up to 35. And that kind of gap is usually very significant. In fact, this chart goes back to a year ago, and we haven't seen any kinds of gap like this. So I wonder what it means to serious market watchers like Noor Al-Ali. She's Bloomberg's Markets Live editor, and she joins us now. Noor, I saw you writing a little bit about this morning on the MLive blog. What do you think of the big move at the short end of the curve?
Good morning, Matt. Well, honestly, I think this is the moment that we've been waiting for. Markets have really been building up to it, and something absolutely beautiful is happening. Markets are finally speaking with each other. Energy prices are soaring, and they're moving yields, and yields are actually responding, even if that song is in D minor.
Building bridges in D minor. I love that. You're so poetic when talking about the market. So what happens to treasuries from now?
Well, realistically, what's happening right now is that investors are pricing in higher rates, and what that means is yields are going to start soaring, and equities might actually, rise on that because it's 2021, and so far there's no alternative.
Well, what's the correlation between the bond market and what yields are doing and what we're seeing in commodities?
Absolutely. So this is something that my colleague Eddie van der Walt swears by, you know, that relationship between soaring energy prices and the yield curve here, especially at the lower end, because what you're seeing here, even if you look at break-evens at the 2-year end, you see that markets are starting to price in higher inflation. How's that driven by? That's driven by soaring energy prices, driven by, again, the energy crunch here. And I've used the word driven by quite a bit, I think. But realistically, what's happening here right now is that you've got a situation where inflation might prove to be a little bit more sticky because you have energy prices, something that central bankers can't relatively control as they would with rate hikes, and that's something that's very concerning. And energy traders have been talking about this for months.
So, Nora, what I'm trying to understand is actually the dynamic between, for example, the Fed and other central banks and the Bank of England, because they also have a different kind of economy here in the UK. But once they hike rates, does it kind of reprice everything else?
Well, we saw this a couple of weeks ago, or perhaps last month, when the Bank of England said, we're going to be a little bit more hawkish, and gilts, triggered the move in yields across the curve here, across countries, whether in the US and Germany. But here we've got a moment where the Fed said, it could be appropriate for us to taper. The BOE came out a bit more hawkish than you'd expect. Then they kind of pared down these comments. The ECB, though, they're in a corner on their own, and they're saying, look, we might pare these down. It's going to end in March, but look, we've got something else coming up. Don't worry. It's pretty much like Hotel California. Can you actually lead that tapering debate? And I think that's something remains to be seen.
Gosh, that reminds me of the Greek finance minister during the height of the Greek crisis. A whole other conversation completely, which I want to have with Noor Al-Ali of Bloomberg Markets Live another time. Now, for more market analysis, check out MLIV Go on your Bloomberg terminal. There's great analysis, also some great parallels with D minor music. This is Bloomberg.
What have we learned from this evergreen crisis so far?
From my investment perspective, I think diversification is very important. So far this year, we see many events, right? Maybe in the fintech sector and education, casino, and property. So I think diversification help you lower your risk on your overall portfolio.
Medium term, though, are you seeing more risk and reward in the high yield space in Asia? How are you viewing this right now? Are there actually buying opportunities given just the selling we've seen?
This time is a bit different in the property cycle because in the last, when you see there's a tightening measure, there's always demand there, right? Just the government trying to suppress the demand. But this time we're seeing a confidence issue, is like a buyer strike because of the sentiment. The evergreen is hurting the sentiment and people don't want to buy. And other developer, because they want to get cash.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
Google is saying it has accelerated innovation in the country, and it's planning to appeal the FTC's decision. What's your take on this, and how do you plan for further scrutinies?
We are going to see what they make and
what changes they are actually bring to this market.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kaylee Lines in New York. Let's get to the first word news for you this morning. The number of people working in the UK went above pre-pandemic levels last month. That's an indication of a strong labor market that may lead the Bank of England to raise rates. Payrolls rose by a record 207,000 in September. Meanwhile, job vacancies rose to 1.2 million, also a record high. Basically, they need more people. Where are they going to get them? In China, Tesla overcame a broad slump in overall car sales. The electric vehicle maker's shipments of China-made cars to the local market rose for the second month in a row. Meanwhile, China's overall auto sales looked bad. They fell 17% in September after a drop in August, a drop in July, a drop in June. And European car makers are down 2% and change. Bitcoin is now flirting with a run towards its all-time high. The largest cryptocurrency is up more than 90% since a low in July. It was trading a little over $57,000 last time I checked, less than $8,000 away from the record. Still, you can't count JP Morgan CEO Jamie Dimon as a skeptic.
I personally think that Bitcoin is worthless, but I don't want to be a spokesman for it. I don't care. It makes no difference to me. Our clients are adults. They disagree. That's what makes markets. So if they want to have access to buy or sell Bitcoin, it's hard. We can't custody it, but we can give them legitimate, as clean as possible access.
Dimon says he expects governments will be regulating all cryptocurrencies sometime in the near future. And I think that's a given, especially with all of the questions behind, for example, Tether and DeFi. Gary Gensler has made it clear there's nothing he's not going to regulate. So I guess cryptocurrencies are going to fall into that basket as well.
Yeah, and it started with China as well. They regulated, but if you're a Bitcoin bear, then you just believe in it, or if you're a bull, you believe in it until, it goes to the moon, I guess. It was interesting to hear Jamie Dimon say it's worthless, question its 21 million supply cap, but at the same time, JP Morgan actually quite advanced in offering some of the products. Coming up, Christian Keller, head of economics research at Barclays. Maybe he'll have a thing or two to say about Bitcoin. This is Bloomberg.
When I had a look, it looked like she was blind. The vet that she's registered with were only doing telephone appointments, which was a bit pointless because she really needed to be seen by someone. And I couldn't get one anyway for like another week. I was just quite worried about, the complications of leaving it for so long.
We
We've seen millions more animals becoming pets in the past year due to the people having increased time at home. What we're also finding is due to Brexit that we're having decreased numbers of European vets working over here. So unfortunately, we're unable to meet that current demand for pet services. Also, COVID's got the inevitable impact with people having to self-isolate.
It is very limited what we can diagnose, so it's more about peace of mind and determining whether they do need to be seen in person.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Francine Lackman, London. Matt Miller in Berlin. Katie Lyons in New York. Matt, the focus on inflation once again. Energy prices higher once again, but it's starting to hit a bit of turbulence on the markets.
Yeah, I think, the interesting thing about energy prices, and we go back to this again and again, is that central bankers consider them transitory, and so they don't include them in the core numbers that are so important, whether it's CPI or PCE. But of course, as humans that live and work and exist in this society, we need to buy that stuff. Yesterday, I was talking with Alex Steele, who pointed out that, if we have warm weather, you're going to see, for example, natural gas, which has climbed to record highs, just tank. And that's bad for investors. On the other hand, if it gets cold, people are going to be forced to pay so much more to heat their homes. So, it's a double-edged sword here, and I think it's definitely something that the markets are watching very, very closely.
They are very closely, and I guess this unpredictability is what makes it even harder for central banks, Kaylee, and that's filtering through inflation expectations.
Yeah, the market is really trying to get its head around what exactly is going on with inflation and with growth, and is stagflation the proper term to use here? All of that said, while we were more deeply negative earlier on in the session, actually we are well off session lows, at session highs in Europe, only down about 0.1% on the stock 600 at the moment, and S&P 500 futures have actually flipped into positive territory, up about 0.1% for their part, with about 4 hours to go until the opening bell. Speaking of inflation concerns, though, you are seeing that showing up in the shorter end of the yield curve today. The 2-year yield up about 3 basis points, while the 10-year yield is basically steady, sitting right at 1.60%. And then, of course, to those higher energy prices, WTI crude only up about 0.25%, but still north of $80 a barrel at its highest since 2014. And of course, those higher oil prices have given a lift to energy stocks in recent days, one of them being Occidental Petroleum, which is higher by about 0.9% in the pre-market. But just keep an eye on airline stocks today. First and foremost, Southwest, as it deals with thousands of flight cancellations, thanks in part to some major staffing issues. It's down about 0.2%, and you have other airlines, Delta and United, lower in pre-market trading as well, Matt.
All right, very interesting stuff, and it all figures in, I think, as well, to the inflation concern, which is driving consumer confidence lower and lower and lower. That's what this chart is about, and it's something I was talking about yesterday on my Bloomberg radio program with Danny Blanchflower. Now, he, the famed economist from Dartmouth and former Bank of England member, points out that when you see drops in consumer sentiment like this, like we've seen in the University of Michigan, like we've seen in the Conference Board Index, but also, investor sentiment, like we saw this morning in the ZEW survey, that tends to portend a recession for the economy. Now, most economists are saying, hey, we're going to grow 4% and change this year and 3% and change next year, so not really near recession territory. But yesterday I asked him if he was serious about this recession prediction, and Blanchflower said, absolutely, this is what does it. You get these negative feedback loops, and when consumers don't want to spend, you get really demand-constrained problems. Let's bring in Christian Keller right now, head of economics research at Barclays, to get his take on the drop in confidence, both consumer and investor, and what it's going to mean for the economy. Christian?
I mean, I would be somewhat careful with the historical comparisons. We had so many of them over the past decade. Remember the famous flattening of the yield curve, 10-year, 2-year, 10 years, and there would be recession. It didn't really happen. And this time we have a very extraordinary situation where we have all these supply shocks. We still have, and I think we shouldn't forget that, and particularly in the US, it seems to have influenced consumer confidence. We still have a COVID outbreak, the Delta variant, and all these things play a role. However, while maybe, not wanting to use the R word, the recession word, we very clearly see a slowing now in the global economy that is faster than we had anticipated. We all knew we peaked over the summer, and we thought we were slowing, but we're slowing faster than we earlier thought. And the sentiment plays a big role. And in particular, I would be even more concerned if it starts to show in business sentiment, because consumers can be relatively fickle. They could come back if things change a bit. But if business sentiment would change, that I think is particularly worrisome.
It's interesting to see that we have, the other side of the argument is that we have a supply constrained problem, right? Supply chain issues are the big fear here. What's your big concern when you look at headwinds to the economy?
Well, I think the origin is very clearly a supply side issue, and the supply side constraints that started off as bottlenecks in shipping, then it became semiconductors, then it became now energy, and it just seems every day you wake up and there's a new concern, and they last longer than people thought. We now know semiconductors will last way into 22. On oil and gas, we don't know yet. The winter could play a role. Natural gas, maybe Russia could supply more. So it's also very complex with regard to some of these issues. There are many overlaying aspects. But I think supply side constraints are crucial. But as you mentioned, if these supply side constraints then start to affect confidence, then they could turn into demand, an additional demand shock as well. And if you have the combination of the two, then of course it turns into a loop.
Christian, talk to me a little bit about where this ends. So does it mean that we could actually see stagflation, or is it something that central banks, if they do the right policy, you like stagflation, don't you, Miller? If central banks deal with it now, will be okay?
Well, I think stagflation is a word that has been used, and obviously it has, I prefer the term stagflationary impulse, because what we have seen over the last 6 months was first the rise of inflation, much more than was expected, and much more persistent than we expected. And now we're seeing the slowdown in growth. So that is clearly something, slower growth, higher inflation, that's associated with stagflation. Again, as was said earlier, if you look at the growth rates we still have, we are far from a stagnating and also even further far from a contracting economy. But, it is, I think, clearly of concern. I think it will affect central bankers. We think, for example, the Fed is, the threshold for tapering was so low. We think they will announce tapering in November. But, that means just ending the QE in the middle of next year. But when it comes to properly hiking, I think they will wait. Yeah.
Do you worry actually about the U.S. consumer like Goldman Sachs does? And have you had to revise downwards your growth expectations for the U.S.?
We have revised down our growth expectations on the U.S. consumer, but also on some other effects, which are quite interesting. For example, that the U.S. is still not letting many people in. We see a very negative trade service and services balance. So there's a lot of unevenness now in the U.S. Net exports, including services. Look, the U.S. consumer is at the heart of the U.S. economy. 70% of growth is consumption. We know that higher fuel prices immediately have effects on spending. So it would be, it would not be adequate to say we're not worried about the consumer. I would say, though, however, that so far, if you look even at the relatively low employment gains, but if you look at the payroll, the growth of the payroll, we think that is continuing to support consumption in the U.S. sufficiently, at least to stay away from any recession scenarios.
Christian, as we head into earnings season, it's really going to be all about margin and pricing power and the ability to pass on higher input costs to consumers. Are they going to be less tolerant of those price increases?
That's an interesting question, because what we see in consumers, and that's something we have been discussing with regard to gas prices as well, in principle, what you see is still a lot of excess savings. So, while labor markets may be recovering a bit slower than we expected, consumers really have a lot of very liquid deposits left. So in principle, they're not constrained in spending. So if prices, for example, in goods prices continue to go up, but consumers really want to purchase, in principle, they do have the purchasing power if you consider the excess savings. So it really very much depends on their reaction. With confidence low, however, that would suggest that they will not use those savings. So again, we're back to confidence. It's very important that confidence is there, because then in principle, consumers could actually be willing to, as you say, tolerate those margin increases and pay higher prices.
All right, Christian, thank you so much. Christian Keller there, head of economics research at Barclays. Now, Matt Miller liked the word stagflation so much, he's now looking at stag census. And this, Matt, is on a Deutsche Bank note, actually, that you're sending around.
Yeah, absolutely. Anna Edwards pointed out to me, I was talking to her on Bloomberg Radio this morning, and I told her I was really fascinated by the amount of mentions, the amount of times I've heard stagflation over the past few days. And she pointed out that Deutsche Bank has done a survey and found their customers have completely different definitions of what stagflation means, right? I'm going to share that with our viewers when we come back, because I've got some really interesting charts as well around stagflation.
I like it. Stagflation for me just means an ugly scenario. Coming up, the UK and the EU are preparing for a fresh clash over Brexit this week. Both sides are set to unveil major policy proposals related to Northern Ireland. We'll get the latest next. This is Bloomberg.
população é uma população importante, é uma população que frequenta a escola também, né? Então é importante que eles também estejam protegidos para o coronavírus, evitando assim a transmissão.
Eu estava esperando muito por essa vacina. Desde o ano passado eu estava torcendo logo para poder minha vida logo voltar ao normal, que eu quero logo voltar para a escola, eu quero voltar a sair com meus amigos, eu quero sair, eu quero voltar à minha vida normal. Foi toda administrada.
Watch Bloomberg Surveillance to learn how to look at markets, how to look at trends, and how to look younger.
What do you think, John? Botox, or do I really need to get something done?
I think, Tom, if we just change the style up a little bit.
You think so?
Yeah,
You
drop
look great.
the bow tie. Drop the bow tie.
What,
Drop
skinny
the bow
tie?
Yeah. I always say, this is my line, whenever anyone in America has to go at me about a skinny tie. The older you get, the wider it gets.
Oh, really?
Until it becomes a bow tie.
This is a bow tie.
Until it becomes so fat, you just sort of...
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, the UK and the EU are preparing for a fresh clash once again over Brexit this week. Britain's Brexit Minister, David Frost, delivers his speech today calling for a significant change to the Northern Ireland Protocol. Well, joining us now is Bloomberg Opinion's Therese Raphael. Therese, thank you so much for joining us. So the EU has said, look, we actually don't want to renegotiate. So are they going to take unilateral action? What can we expect from the EU tomorrow?
Well, I think the big question is whether this goes to a discussion about technical fixes, for example, exempting the UK from the EU's ban on chilled meats going into from Britain to Northern Ireland, or whether this comes down to questions of sovereignty, of whether the European Court of Justice still has a role to play in implementing this agreement. And if we're hearing about sovereignty and the ECJ more than we're hearing about the technical issues, then I think we're really heading toward an escalation in this war of words, which could end up in a number of places. It could end up with Article 16 being triggered and a suspension of the Northern Ireland Protocol, or indeed a trade war, although let's not exaggerate the threat of that. It is there, but it's not imminent yet.
Well, and trade war isn't the worst kind of war, right, Therese? I mean, what is the possibility that we could have escalated violence in Ireland?
So the Democratic Unionist Party, which is the party that was traditionally aligned with the Conservatives, is essentially arguing that the protocol is not fit for purpose, not just because it undermines trade and investment in Northern Ireland or trade flowing from Britain to Northern Ireland, but because they argue it undermines the peace in Northern Ireland. Now, recall the entire reason for the protocol structure, which sets up allows for a seamless border on Ireland in exchange for controls between Britain and Northern Ireland, is to preserve the fragile peace in Northern Ireland. So the Democratic Unionist Party is claiming it does just the opposite. So that's setting the stage for not just a tinkering with the agreement that was reached just a little over about a year ago, but actually a complete rewriting of it. Now the EU says that no such rewriting is in the cards, and they're promising substantial changes to smooth trade, and I think that's the key question here is, are we heading toward a real discussion over ways to facilitate trade, or has this become so fundamental, so existential for the Unionist Party that they won't accept any of those fixes?
Well, whatever we know, it would be acrimonious and not boring. Therese, thank you so much for all of the insight. I urge everyone to go and read Therese's beautiful opinion pieces also on OPIN Go. Coming up next, oil at $100, while we hear exclusively from a renowned economist, Nouriel Roubini, on energy prices and much more. This is Bloomberg.
OECD nations need to end coal use by 2030, developing nations need to follow suit by 2040, And we need coalitions of solidarity between countries that still depend heavily on coal and countries that have the financial and technical resources to support transitions, because it is essential that no more coal power plants are built.
How far will the Bloomberg surveillance team go to get the inside story?
The UK will deploy its reserve tanker fleet this afternoon.
There we go.
Tom McKean and I might be part of the reserve fleet
We might be.
that gets deployed.
This is more complex than people think. The steering wheel's on the wrong side of the truck. That's the first thing.
Oh my God.
Thank you to the gentleman out on Twitter that captured this moment.
Wait, question.
Wonderful.
Who of you has a driver's license?
You don't need that.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Francine Lacqua in London and Matt Miller in Berlin. Well, the surge in energy prices is stoking inflation fears for markets. Nouriel Roubini, CEO of Roubini Macro Associates, spoke to Bloomberg earlier and gave his take about the price pressures we're seeing in energy and cryptocurrencies.
About oil being above 100, it depends also on the hoarding behavior. If around the world right now there is a scarcity or perception of scarcity, everybody may be trying to hoard oil, natural gas, or coal in ways that then push the price much higher than the current level as well.
You do see a risk of oil above $100? In what time frame, briefly?
Yeah. Well, in the next few months.
I know you're not hot on Bitcoin traditionally. At any margin, do you agree that Bitcoin can be a hedge against inflation rather than gold?
No, I don't agree on that because the price of Bitcoin has gone up by I don't know how many 100 percentage points this year alone, while inflation expectations have gone higher, but only marginally. So I don't explain the rise in Bitcoin prices as driven by fear of high inflation. I worry about inflation, but the number of inflation not such to justify that rise in Bitcoin prices. And I think that the term cryptocurrency is a bit of a misnomer because Bitcoin or other unquote cryptocurrencies are not a unit of account. They're not a scalable means of payment. They're not a stable store of value over goods or over wealth. They're not even a single numeraire. So calling them currency is a misnomer. Some people say they're an asset, but typically an asset gives you some source of income and cash flow. Stocks give you dividend, bonds give you a coupon, loans give you some interest, real estate gives you rent, or they have some use or utility like commodities or like real estate and housing, or like in the case of gold, they have also some other use or utility like in industry, gold, or as jewelry. And has been historically for 4,000 years a stable store of value against not just inflation, but also deflation, financial crisis, political and geopolitical risk. So I don't have a fundamental model to price something that doesn't have any income, doesn't have any use, doesn't have any utility, is not scalable. So I don't know how to price it, frankly. I think it's just a self-fulfilling demand that leads to a movement in prices, but doesn't have, in my view, a fundamental intrinsic value.
Well, at least he doesn't mince his words, Nouriel Roubini. We know exactly where he stands on crypto, the chief executive there of Roubini Macro Associates. Now let's get to our own chief executive, Tom Keene, co-anchor of Bloomberg Surveillance, chief executive of Keene Associates, looking at the markets, Tom.
Looking at the markets right now, we had a fancy chart yesterday, Francine, with a lot of math. Let's go wicked vanilla. And we do that with the Standard & Poor's 500. Just look at it. This is the pandemic chart. It's from before. Off we go near Valentine's Day, a cliff down, a bottom. Remember, it was ugly. And the shock of this persistent advance. And to me, Francine and gang, what's so important here is what has not happened. We're down 4% from the top. And we got all the fears that you guys have been talking about in the hour. In the stock market, for the most part, has been flat. It goes back to July 21. The story is stocks have slipped, not fallen, as Kitchukes writes this morning.
Yeah, for me, the interesting thing lately has been recession and stagflation, Tom. Blanche Flower wrote a paper last week saying we're entering a recession in the U.S., and everyone has been talking about stagflation, though Neil Dutta wrote yesterday, this isn't stagflation, it's an inflationary boom. What are you hearing?
I'm hearing all the different debates you just mentioned. I would point out that stagflation gets the headlines mad in the media, but there's a large body of people aggressively pushing against the concept of stagflation. I would say intellectually leading that is James Sweeney of Credit Suisse, who just flat out says it's overwrought.
Tom, thank you so much. I'm looking forward to the program. Sure. Tom Keene, there, co-anchor of Bloomberg Surveillance. Now, there's quite a lot else we're watching. And of course, Kaylee, you're looking at jobs data and data from the U.S. in general.
Yeah, first up, NFIB small business optimism data, which will cross in just a few minutes at 6 a.m. Eastern time. What's really going to be interesting is how small businesses are grappling with shortages, not just in terms of materials, but also in terms of labor. Remember, the early data we got last week showed 51% of small firms had jobs last month that they could not fill, and 30% of them were looking to raise wages as a result. And in that same vein, we get JOLTS data at 10 a.m. Eastern time. That will give us more detail on the number of job openings in this U.S. economy. It's expected to be even further north of 10 million, and it really speaks to the mysteries of this labor market, Matt Miller.
That's a big number. Considering the UK has 1.2 million, if the U.S. is about 9 times that, I think it's really interesting. I'm going to continue to watch the stagflation debate I was just talking about with Tom. I saw a chart on Bloomberg TV earlier showing that searches for the word or uses, mentions of the word stagflation have soared. And then Anna Edwards told me about a Deutsche Bank stag census that she saw. Here is, well, there's the chart of the news trends, and you can get that on the Bloomberg if you type NT, and you can use that function to search for mentions of things, which is really interesting. This is the stag census that Anna was telling me about on Bloomberg Radio this morning. Deutsche Bank asked their clients, what is stagflation? And 43% said growth around 0, but inflation kind of off the charts. 30% said growth below trend and inflation comfortably above target. And only 25% said a strong slowdown in growth and a strong pickup in inflation. You know, I'm a child of the 70s, Francine. So for me, stagflation really means when the economy is contracting and inflation is shooting up, making it a very painful situation. I didn't realize there were so many other possible definitions, but I think it's really interesting.
Yeah, I think it's really interesting. And of course, you know, perceptions also change what we could see markets do depending 100%. On how central banks react. So it's like a feedback loop, right? Yeah. Catch-22, as Absolutely. We say here in the UK. What I'm watching is another catch-22. It's Brexit. I know there will be barbed wires. It's always quite interesting to hear the UK and the EU fight. A Brexit rift is definitely resurfacing with a fresh fight over Northern Ireland. So the UK and the EU will lay out their sides on major policy proposals related to Northern Ireland. Today we hear from Britain's Brexit Minister David Frost. He delivers a speech in Lisbon, and then tomorrow we'll hear from the EU. So it's not going to be dull, is all I can say with fairly certainty. Now, more Bloomberg surveillance up ahead. We'll hear from Laura Rame of FS Investments and Tom Porcelli, RBC Capital Markets Chief U.S. Economist, amongst others. This is Bloomberg.
low point of the Greek economic debacle? What were you thinking about to make Greece recover as it has?
Well, Tom, we took over in July 2019 with a very clear mandate to make the economy grow again. We were hit by the pandemic, but we still managed to implement very significant reforms, and I think we used the fiscal room that was available to us to support the real economy. We're very encouraged by the recent data. The economy grew 16.2% in the second quarter of this year. We revised our forecasts upward to 5.9%, and this may be a pessimistic forecast for 2021. We see lots of interest for foreign direct investment by American companies, European companies. We're making big progress in digitizing the state. We have a very ambitious green transition plan. And overall, I think the mood in the country after 10 years of crisis has significantly changed.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Of delays and shortages in the economy, which I believe are beginning to show through in hiring trends.
COVID is the enemy of everything, and it is absolutely the case in labor markets.
We have seen a substantial repricing of both growth and inflation.
Under our forecast, growth is much more moderate, and inflation is on its way back down.
That whole reflation recovery trade is still ahead of us.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
The week begins tomorrow from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Your equity market unchanged on the S&P. Tom Keene put it in a headline. The week begins on a Wednesday.
I agree. It really begins tomorrow. We've been churning and waiting for it. We've got the earnings guideline. I'm most interested in earnings, but also, John, the inflation picture with all its complexities.
The CPI tomorrow, Tom, onto retail sales on Friday. It's a test for the big story we've been discussing now for weeks. The upside risk to inflation, the downside risk to growth. Steve Englander of Standard Chartered thinks the data will talk to that story. He sees upside risk for inflation and downside risk for retail sales.
Yeah, I thought the Englander note was important, and the conversation we had with Jan Hatzius yesterday I thought was important. He implies, I need to be very careful here, if you take 2 or 3 of his comments, John, you get back to a 4% nominal GDP. That's a top-line GDP. I don't think anybody's mentally prepared for that after a boom economy.
We can pretend it's a Monday again, Tom, and welcome back in Lisa Abramowitz. Lisa, welcome home. Welcome back.
Bond market closed. She takes off.
A downgrade from Goldman Sachs on GDP yesterday over the weekend, Lisa. I bet you did. What did you think?
I thought that actually speaks to this whole debate, the idea that consumer sentiment is declining. And this, to me, is the big tension. Why is there this dissonance of investor confidence in the reflation story picking back up? And yet we're seeing that small business optimism that came out disappointing just a minute ago. You see the fact that people's optimism seems to be waning on a consumer level. What gives to this gap?
Look out for the Fed speak as well. Vice Chair Clarida coming up a little bit later. Lisa will give you the day ahead in just a moment. Here's the price action for you. On the S&P 500, totally unchanged. Advancing, okay, a single point on the S&P. Outside of that, yields in on 10s. We reopen in the US bond market at 160.31 on 10s. Yields higher, though, on 2s by 3 basis points, Tom. That 2-year yield now 34 basis points. We keep inching higher there.
Yeah, I see that, John. I'm sort of surprised at a 160 on 10-year yield. I thought maybe with a close, we'd pop 162 and stay there. But again, It's the oddities of the moment.
160.31 on 10s. And Lisa, we keep climbing crude. 80.70, had a little look at 82 in yesterday's session. WTI up 0.2%.
You know what I find interesting? The fact that crude and 10-year yields climbing in tandem. How does this make sense when people still talk about stagflation, the idea that the shorter-term increases in prices will dampen demand? This is something that I think will be an ongoing theme throughout the day, throughout the week. 10 a.m. we get the U.S. August JOLTS job openings. The expectation is for it to hover, perhaps climb just a little bit higher toward that 11 million mark. This is the big labor market question. Why? Where are all of the workers? Why are they not coming back? Is it just that they don't want to and they have those savings piles that they can hang on to? Meanwhile, as you've been saying, John, Fed Vice Chair Rich Clarida is speaking at 11:15 at the Institute of International Finance annual meeting. Question is whether he'll respond to Nouriel Roubini's comment this morning that the Fed will wimp out and not necessarily hike rates if they see some of these disappointing data points that people are expecting. We're also going to hear from Atlanta Fed President Raphael Bostic on inflation. And at 1 p.m., the U.S. Treasury is planning to sell $38 billion of 10-year notes. This, to me, is interesting because we have seen those yields climbing to the highest since June. We do have this concern about oil. Is that inflationary long-term? Is this just the knee-jerk response? We have seen somewhat of a withdrawal from some international buyers. How much will that persist, John? I find these auctions fascinating.
See what we missed yesterday, John?
I missed Lisa. Just a spark of Bramo in the morning, you know. Fired up and depressed about the world. And
fired up and depressed at the same time. That's
Lisa,
me in a nutshell.
love it. Absolutely love it. Tom, Southwest is positive in the pre-market. Let's talk about a stock quickly. Positive 0.6%. Tom, have we figured out what's going on with that airline? At all, in any way, shape, or form?
Let's figure out what we haven't figured out. We haven't figured out the IMF and Gorgieva. She's staying around. We haven't figured out Southwest Air, John, versus the other domestic carriers. And we haven't figured out what we're going to do tomorrow with the inflation report.
Let me ask you a question you won't want to answer. Will you trust Southwest with your booking around Thanksgiving? Will you trust Southwest with your booking around the Christmas holidays? And isn't that the issue right now for Southwest?
I could be completely wrong in this. I defer to George Ferguson and our experts. It sounds like they're just trying to run it lean and mean, and that doesn't work.
And can't find the pilots, seemingly, Tom. Seems to be a problem if you want to fly planes.
I mean, we're so amply staffed here that we don't run with that psychology.
Just loving the value add this morning on this one, Tom. Marvin Lowe joins us now, State Street Global Macro Strategist. Marvin, let me start with this quote from Steve Englander of Stanchart. Markets are keying off stagflation fears, not growth. And this week is likely to feed those fears. We think CPI risk is to the upside and retail sales growth to the downside. Marvin, do you agree?
Yeah, I mean, I've been in the camp that yields were going to remain low because we had hit peak growth. I think what's interesting with some of these growth discussions now is not only are we acknowledging that 2021 is not evolving the way we thought it was going to be, but 2022 is not potentially going to be the pickup of all of that. And that's been probably the most interesting thing with these growth revisions to me. It's an overall decline rather than just a shifting of the seats, if you will.
Marvin, why then are 10-year yields rising?
You know what? It's very much an energy story at this point. I think that you hit various thresholds when it comes to different asset classes. And with the inflation discussion, with the stagflation discussion as rampant as it is, everyone's looking at energy prices, and it caught the market off guard. And with regard, and you guys had just such a great intro because you really touched upon all of the questions that are in the market right now. How long this COVID shortage, challenges with hiring goes on is something that the market is struggling with because it's a lot longer than we thought at the beginning of the year, and it's a lot longer than we thought even a couple of months ago.
Wait, but Marvin, go back to this idea that it's an energy story that's letting yields rise from here. This doesn't necessarily make sense if people are viewing this as a stagflationary type of backdrop, if they view higher energy prices as dampening consumer sentiment and business sentiment, as we've seen in survey after survey. Can you square these two ideas?
Yeah, it certainly is hard. I mean, ultimately, in the intermediate term, I am not in the stagflation camp. I think that this conversation around slower retail sentiment, slower retail sales, very much is feeding into why inflation eventually will come off. It's really the constant barrage of shortage discussions, how challenging the holiday season is going to be in terms of securing kids toys for your kids. and how long this labor market shortage is going to last that keeps it front and center for a while. So certainly there's a period where we've got all these savings and it's going to keep everything buoyed, and prices are going to be slower to adjust. So there's this kind of a slower growth into higher prices environment, which I think the rates market is grabbing onto at this point. But still, real yields, before the Fed, they were around 90-something basis points. They're back at minus 90-something basis points. We're not changing the longer-term view. It's just the maturations within the short period that's driving markets right now.
Marvin, there's a frenzy of narratives. You just went through a whole list of them as well. And what I find fascinating is, for the most part, those narratives are short-term. If I'm an adult and I have a 2 or 3 or 5 or 10-year investment perspective, am I supposed to sell now and go to cash? Or do you remain invested through this frenzy of narratives?
Personally, you remain invested. When you're talking about negative yields, negative real yields, to the extent that we have in the developed market, you don't have, and we kind of always certainly look to earnings for clues and look at the valuations, and we shake our heads because these are valuations that we haven't seen other than other stressful periods. But you remain invested, and you make your calls in terms of where you think monetary policy is going, and kind of where the challenges are from a growth and demographic perspective, which really haven't changed since before the pandemic.
Marvin, can you just touch on the US-Europe divide right now, where you're more comfortable taking that risk, regionally speaking?
Yeah, I still think the growth prospects in the U.S. are stronger. I think the fact that we're still looking at kind of these above trend GDP numbers, even though we're bringing them down, speaks to the strength in this economy. And when we worry about job shortages, it's because the demand is there. So earnings estimates are still continuing to increase, and my equity colleagues are pointing out that margin expansion is still in the cards for next year, even if the growth of margins is slowing a little bit. It's still margin expansion.
Interesting, even with the energy issues. Marvin, thank you. Marvin Lowe there of State Street. Looking at that Europe-US divide right now, euro dollar 115.61. Jordan Rochester over at Nomura, Tom, staying short this one, saying that to turn this one around, we either need the ECB to get hawkish and talk about rate hikes, probably not going to happen, or we need the Fed to get a whole lot more dovish. Unlikely at this point.
Well, I agree with the barbell of U.S. and Europe, and also this morning, John, I would notice a number of pros have noted the yen dynamic as well. I've got dollar yen. I'm looking for it on my screen. My eyes are failing me. Help me here, John. 113.30. There it is. 113.30, and that's rocking 2 standard deviations, weaker yen, and that's an indication of some Asian noise, but also an indication of that tension you mentioned with Europe.
From equity to FX to commodities, Lisa, Brent crude 83.63, unchanged this morning, through 84 yesterday, through 82 on WTI briefly, 80.50 right now. This from Raymond James of Pavel Molchanov on oil above 80, says the following: the ceiling on price will be a combination of OPEC's response and the threshold of pain in relation to demand. I have no idea how close we are to the latter. I wonder how much pressure builds on the former from this administration specifically leaning on OPEC Plus to get something done.
That's exactly where I was going to go. This is really the big question. When are we going to hear more noise from Washington, D.C. to OPEC Plus saying you guys need to produce more? And why isn't there more of a sign to, frankly, the shale patch to get restarted?
Where else can you go, Tom, where we're just brutally honest and tell you the week begins tomorrow? It begins tomorrow. You can't go anywhere else for that, can you?
You
can't.
2 days for the Red Sox.
Why did Lisa come back? That's what she's thinking.
That's what I was going to say. Of course, that's what I'm thinking.
Because we missed you, Lisa.
Oh, that's
Lisa
very
Bravis,
sweet.
Tom Keene, Jonathan Ferro, your equity market unchanged. Up next in the next hour, Michael Schall of Market Field Asset Management. More on baseball too. The audience can't wait, Tom. They can't wait. From New York City, this is Bloomberg.
The Houston.
With the First Word News, I'm Leanne Gerrans. In North Korea, Kim Jong-un showed off a varied arsenal of missiles designed to frustrate U.S. defense systems. It was a rare display that appeared to be Kim's latest effort to break a diplomatic stalemate over his nuclear program. He blamed the U.S. for creating regional tension. The House is set to vote on a short-term increase to the government's borrowing limit today. That would avert the immediate threat of a catastrophic default, but it sets the stage for an even bigger showdown on debt and spending in less than 2 months' time. The International Monetary Fund will keep Kristalina Georgieva as its managing director. The fund's board reviewed accusations that she improperly influenced a World Bank ranking of China's business climate. Georgieva has denied any wrongdoing. Now, the number of people working in the UK went above pre-pandemic levels last month. That is an indication of a stronger labour market that may lead the Bank of England to raise interest rates. Payrolls rose by a record 207,000 in September. Meanwhile, job vacancies rose to 1.2 million, also a record high. And the travel rebound in the UK is also picking up pace. EasyJet says it will boost capacity to about 70% of 2019 levels this quarter. The lifting of travel restrictions has led to a surge in bookings to places like Egypt and Turkey. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Natanggap ko po ang inyong nominasyon sa akin bilang kandidato sa pagkapangulo ng Republika ng Pilipinas. I am a fighter, and I will always be a fighter inside and outside the ring.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now. Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Tapering is very likely to be announced at the next meeting. That's going to take until the middle of 2022. Under our forecast, growth is much more moderate, and inflation is on its way back down to something like 2% on core PCE. In that environment, I don't think they're going to move directly to rate hikes.
Just wonderful to catch up with Jan Hatzius and start the week with the Goldman Sachs chief economist. From New York City this morning, good morning. Tom Keene, Lisa Bramett and Jonathan Ferro. This Tuesday morning, your equity market shaping up as follows. We're down 3. Let's call it -4. We're down 1/10% on the S&P. It is a mild move lower. Yields come in on 10s, about a basis point as the Treasury market reopens. A break of 160, a little one, 159.79. At the front end of the curve, 2s, yields have been bleeding just a little bit higher. So this curve a little bit flatter from both ends, up 2-3 basis points on 2s to about 34 basis points. In the FX market, euro dollar 115.57, unchanged there, and basically unchanged on crude, holding on to an 80 handle at 80.47. Tom, just quickly, it is about 8:18 p.m. in Brisbane, Australia. George Nickel writes in on Twitter, I watch Surveillance nightly in Oz purely for Tom Keene's sport news. My goodness. George, Tom Keene, take it away. What do we need to know about the baseball? Just get it done.
It was exciting. I mean, I've been a zillion games at Fenway Park, and I've never seen it fired up as the last number of games.
So this is against the Tampa Bay Rays. Do you want to tell the audience what happened?
Well, what happened is a better team was defeated. I mean, that's all there is to it. Tampa Bay's flat out.
So you're in the mix?
Yeah.
Okay, you support them again?
Yeah, they're way in the mix, and they're going to go up against a tough Houston team or, you know, a renegade White Sox team, and we'll see.
I hope the one man in Australia is happy that we covered this, Tom.
Yeah,
Carry on,
We'll
please.
do the Veronicas in the next hour.
Sounds
as well.
wonderful.
That's what you do when you're in Brisbane. Right now, John, let's go to Washington. Joe Matthew joins us. Joe, I'm absolutely fascinated by what is not a surprise, which is the radio silence on social policy, the radio silence on infrastructure as well, and the idea of a very different president and all the warring factions of the Democratic Party. What's the Biden strategy that you glean on your radio program?
Well, I'll tell you, I remember being in Boston for the anniversary of the Boston Marathon bombings when a vice president named Joe Biden came to town to mark the occasion. Big speech at the Heinz Convention Center. Tom, you might remember it. He said, "We are Americans. We own the finish line." And he used that line again, by the way, at the next Democratic National Convention with regard to the country, not just the city of Boston. But that does expose, largely embody his worldview, right? We're going to lose a lot of battles. That seems to be the way he carries himself as long as we win at the end of the game. And that is exactly where Joe Biden still is now, with the long ball trying to get moderates and progressives together.
Joe, let's stay on the Boston theme here. I was at the Boston Convention. I met twice there with Senator Obama long ago and far away. And I looked down on the Kennedy clan, watching Ted Kennedy in his final moment, essentially, with his gathered Democratic brethren. That's gone. That's ancient history.
Right.
Is the president part of that, or is he part of the new liberal, aggressive Democratic Party?
I think it depends what day you ask him, because you want to say, yeah, he was part of that. He's a product of that, Tom. But what happened when he went up to Capitol Hill when things were about to fall apart a couple of weeks ago? He sided with progressives and said, look, this is obviously the heart of the party here. I'm paraphrasing, and said, fine, we'll put infrastructure and reconciliation together because, look, they seem to be guiding this conversation so far, despite the very loud cries from moderates.
Yeah, Lisa, do we allow paraphrasing on surveillance? I can't remember. I didn't
I
didn't
think
read the manual.
we do Tuesdays and Thursdays.
Okay, thank you.
Fine.
Okay. Anyway,
well,
moving
tomorrow's
forward.
the first day of the week anyway, so this doesn't count.
That's very true. There is a question about the warring factions, how they deal with the rising oil prices amid the backdrop of hoping to build out infrastructure. Are we looking for a Washington response to perhaps encourage OPEC Plus to pump more?
I'm always looking for a Washington response. The problem is Washington doesn't have a lot to respond with. Look, we've heard this before. You see this with administrations, particularly when you start inching up on election time. Let's start releasing supplies from the Strategic Petroleum Reserve. We could well see the Biden White House do that. They've certainly suggested a willingness to do so, other than picking up the phone and begging OPEC to start pumping more oil. But if you ask Republicans on Capitol Hill, ask Kevin Brady from Texas, from Ways and Means, they want to start drilling for shale. And I'm wondering when that might actually start happening. It's something that would run totally counter to the Biden climate agenda, but that's the world we're in right now.
Well, that's exactly where I wanted to go, Joe.
Know.
The political pressure here is really uncomfortable for Biden's camp. The idea here that they want oil prices to go down, but they also want to support the greenification of the U.S. economy. What's been the party line in terms of how they dovetail these two very different messages?
Well, I don't think there is one with regard to increasing oil production here unless gas prices are moving higher. It's just the reality of the situation that isn't always embraced, by the climate agenda in this White House. Everyone knows, however, that that's real. You can talk about inflation, you can talk about drug and food prices. Gas prices are the ones that really irritate people, lead to lower poll numbers, and can cause major problems around election time. And that's something that you'll see the White House at least speaking to, but whether they can do something about it, at least, is a very different matter.
Hey, Joe, great to catch up. As always, good to hear from you. Joe Matthew there of Bloomberg. Catch Joe on Sound On Bloomberg Radio daily at 5 p.m. Eastern. Do not miss that. Tom Keene, it's the politics of crude north of 80.
Well, Greg Villiers featured that in his note this morning, John, and I'm sorry, I'm old school on this. There will be a tip point on gas. And what's important, John, is when we look at AAA unleaded gallon of gas, most of our listeners and viewers are going, I'm paying a lot more than that, $3.27 right now, but people are elevated up. You get more and more people up touching $4 a gallon. That's a third rail of American politics.
Tom, isn't that the distinction between the conversation we'll have on Wall Street where people will say, oh, energy doesn't really matter to the overall picture, let's strip that out, to what real people actually feel
I think
beyond
the gap
Wall
is
Street
huge.
on Main Street?
No, the gap is huge, and I'm as guilty of that as anyone else on Wall Street. I'm sorry. It's about driving around. It is an American thing, John. There's a difference here, and I can't articulate it versus Italy or the United Kingdom or Poland. It's just there's a different tone here on this, and it is a third rail, and the moderates know that.
Just to be clear here, people on Wall Street are real people too, but you know what I mean. Lisa, 83 on Brent, WTI on 80. I mean, maybe that's up for debate. I don't know. I'll stay out of that. Lisa, look, it's clear that we've got to that threshold, that pain threshold for a lot of people.
Yeah, Wall Street people are people too.
And I'm going to get some emails in a moment, aren't I?
I am trying to move on.
They are people too. Please move on.
But I will move on. It's not just the price that people pay at the pump. It's also the fact that natural gas prices are going higher. It's also the fact that food prices are going higher. It's a perfect storm of all of these things coming together. And how does that bleed into the Biden agenda? It's increasingly pushing against it, and that's what we've seen. I do wonder how they respond to both these sort of theoretical goals of becoming greener, reducing carbon emissions, creating jobs at a time
a lot of work
when you have all of these frictions and people don't want to pay more.
They need to nominate a Fed chair too.
Oh yeah.
At some point that needs to happen. Tom Keene, Lisa Brabbett, and Jonathan Ferro. Your equity market down about 0.1%. Lara Rame of FS Investments, chief U.S. economist, joins us soon. She's a person, Tom, a real person. I'm told, Tom, there are two of us in Australia who enjoy the sport updates. Just confirmation, there are two, Tom. Congratulations.
is Ireland dealing with that blackout risk, those energy prices spiking?
Well, in the first instance, we will manage it over the next while. I think the key agenda item for Ireland on the energy front is wind, and we've been great developers of onshore wind. The next decade in Ireland will be offshore wind, and we have streamlined our planning application framework for investors so they have certainty in terms of applying to invest in terms of offshore wind infrastructure in Ireland. So that will be a key agenda item of ours, and renewables. We have a very strong climate component in our government and in our government programme, and that of course is not disconnected from the energy agenda. And there will be challenges of that, there is no doubt, but we are making considerable progress.
Are you worried about the here and now? Are you worried about blackout risks? Are you worried about the amount of consumption data?
Data is taking up considerable demand in energy terms, but we have been robust in terms of meeting that to date.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lines in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
With people too. So many messages already. If you don't know what I'm talking about, it's okay. Equity futures down 3 on the S&P. We're negative about 0.1%. On the NASDAQ, we're positive about 0.1% on the Russell. We're down by 0.15. Keep saying the week begins tomorrow. Earnings season begins with the banks kicking things off. Let's get to the banks. Year to date on the S&P 500 and on the banks. Switch up the board. We look like this. On the S&P, we are up year to date by about 16 percentage points. Tidy year for the year of 2021. The KBW Banks Index is up 38%, up by 37.83%. And since September 22nd, when that Fed meeting sparked that conversation about higher interest rates, the KBW Bank Index is up 10% from September 22nd. And Bank of America, let's take a pick a bank. Bank of America is up about 12%. That's a big move coming into this week for earnings season. Switch up the board and get to the bond market. We reopen in the Treasury market with 2s, 10s and 30s. Yields higher at the front end, lower at the long end. We're down about 2 basis points on 30s to 214, up 3 basis points on 2s to about 34 basis points. At the front end, that is the highest we've been at since March of 2020. Got to go back to spring of 2020. There's a heartbeat at the front end now because there's a bigger conversation, Tom, about higher interest rates. 34 basis points next stop here. Vice Chair Clarida a little bit later. Lisa went through the Fed speak. Look out for that. It's the lights still green for November 3rd to taper. Then to the data, Tom, CPI tomorrow and retail sales on Friday.
John Farrell, thank you so much.
Thank you,
appreciate
sir.
it. Laura Rame joins us right now with FS Investments. Thrilled she could be with us, their chief U.S. economist. Laura, one of our themes here, besides waiting for the news tomorrow on inflation and the beginning of earnings season, is the narratives that are out there right now. You've seen this before. How do you take a set of narratives, a sum of all our fears, and process it to a 6-month or 1-year forecast?
Well, I think... Tom, this is a different, this right now, we're seeing narratives that are completely new to us. I do think that over the long run, you need to just stay with your conviction that in the U.S., we're probably going to work out things that are private sector driven more quickly than in the rest of the world. So it's for that reason that I think U.S. growth recovery and continued strength looks more positive than we see in the rest of the developed world. But I think it is important to realize that we're dealing with narratives. Some of them we've seen before, like oil. I heard you say earlier that we've seen this story play out. I've seen it a lot of times. But you see some of the supply chain, and I think, to me in particular, the labor market, the labor supply shortages. These are things which are hard to explain, and we don't still understand what's going on. I don't think, however, that it's a 1-year story, to your point. You maintain that long-run conviction. consumption.
How do you hinge the consumer into this? Any number of economists, and Hatzi is making headlines yesterday talking about a weaker consumer, which gets you back to trend GDP. Do you buy that the consumer is the tip point here?
You know, I actually do. A lot of people are looking at the retail sales numbers as the most important numbers. I think consumer confidence is going to be critical to watch because higher oil prices, higher energy prices, not being able to get toys at Christmas, those are the things that really erode consumer confidence. So I think when I look at what's happening right now, the consumer, continues to be the focus given their enormous outsized importance with growth. And I'll layer on that we've seen a lot of durable goods and a lot of goods consumption throughout this pandemic. And there's only so many goods you can consume. I think there is not the pent-up demand coming out of most recessions like we historically see. So while we have good traction on the balance sheet side of the consumer, I don't know if we have necessarily that pent-up demand that it would keep us growing at outsized pace for consumption.
The Federal Reserve can't print ships. I'm sure they wish they could. They can't print chips either. I'm sure they wish they could. Lara, what's the Fed's role in all of this? What can they do? What should they do?
I think that, to me, is really, at the end of the day, something that we're going to really, the Fed has made a really hawkish pivot. We all saw it. I think the taper is much more on an autopilot. I think they want to finish that and wind that down in mid-2022. But I think that Fed rate hike expectations are too high right now.